Way. I don't see her on Zoom. I'll ask if my ranking members would like to say hello, share any thoughts.
Good morning. And I'm looking forward to today. The real work starts to begin. We get to hear from the people and find out what's important and how, in some fashion, we can help make Connecticut's banking better. Thank you, Mr. Chair.
Thank you, Senator Berthel.
Good morning. Thank you, Mr. Chairman. Good morning, everyone. We have not a terribly complex list of bills to discuss today, but as always, we look forward to hearing, as the good chair spoke to, from our legislative colleagues regarding their bills and the people that represent our financial services all through Connecticut. So should be a nice discussion this morning. Thank you, Mr. Chairman.
Thank you, Senator Berthel. And right on cue, my co-chair, Senator Miller.
Thank you, Representative Doucette. Good morning, everyone. It's great to be here in person, Tom. I'm sorry, Representative Delnicki. I want to thank you all for being here today. I'm excited for the bills that we're about to bring forth this session, and don't want to belabor the point. So let's get started with this public hearing. So you don't mind if I take over, do you? Okay. Thank you. Running late as usual. Your representatives need to do something about that traffic on 95 and 91, the Merrick this morning. But again, thank you all for being here today. So we would like to start with Representative Hilda Santiago. Would you join us, madam?
Good morning. Thank you for having me here to speak on the bill that I put in banking. Thank you to co-chair Representative Doucette, co-chair Senator Miller, ranking members Representative Delnicki and Senator Berthel, members, and the rest of the members of the Banking Committee. I will be speaking on HB 6470, and that concerning access to loans used to purchase mobile manufactured homes. The bill before you is in detail, is a out-of-the-box concept, which is to provide a larger scale of access to loans for mobile manufactured housing. It would also decrease the denial rate of these loans with the purpose of promoting home ownership. CHFA, which is the Connecticut Housing Finance Authority, has a product for financing of mobile manufactured homes, which could be used as a model. This financing of mobile manufacturing homes will increase low-cost home ownership. It will increase workforce, remember that word, workforce, family housing in the state. Low home ownership for these who make between $70,000 to $90,000 a year, which would include young teachers, policemen, firemen, and essentially young professionals. This would be the first step in home ownership, which would lead to owning their first regular home, building equity to buying a regular home down the line. This concept will make it attractive for companies to move into Connecticut with their employees because it provides housing. These are some of the barriers to this type of workforce family housing. It is not profitable. A lot of the banks don't want the headaches. There are other finance companies and brokers that also offer a product like FHA, Fannie Mae, but the interest rates are higher. They're between 6 to 6.2%. And when I looked at the website for CHFA, that's what the interest rate is right now if you want to buy a mobile manufactured home. The down payment assistance programs cannot be utilized in this program. And talking to some folks that are experts at this, there is no market maybe as of 5 years ago. It's higher risk for the banks as they're afraid of high foreclosures. And we'll also need to work with local towns and cities to encourage workforce family and changing the zoning in those cities. And one of the good perks about it, it would increase local property tax. Well, I'm suggesting is a study to be conducted and provide a report from all the banks for the percentage rates of financing. And we have a low financing rate in the state of Connecticut because most people that are buying mobile manufactured homes usually pay cash. And we need to learn how to collaborate and also work with the banks and throwing in a caveat of maybe doing something with the community investment funds. We need to look at how we can do the outreach in the state, market it well, and partner with the banks and other lending institutions to get our workforce housed and have a portfolio of housing that is attractive to companies moving into the state and bringing their employees to low-cost home ownership and invest in the state of Connecticut. The governor mentioned, as you've heard in his budget address, that there are about 100,000 jobs in Connecticut. No housing to house employees that will come with their employers. Let's think a creative way, out of the box ideas to work together. Let's look at community investments that are a win for all parties involved. Involve also the Mobile Advisory Council of Manufactured Homes. And I would like to thank the committee for hearing me today and allowing me to speak on behalf of the proposed bill 6470, an act that will make workforce family housing ownership a reality in our state. Thank you for your time.
Thank you, Representative Santiago, and thank you for thinking outside the box. What I find interesting is you can go into southern states and you see mobile homes all the time. And I think part of that is that's what people can afford. And with the housing market being the way it is today, we need to look at other options. We need to look at other options so that people will have opportunity for home ownership. So I really do appreciate you bringing this bill and bringing the issue to our attention, because I didn't know that mobile homes weren't really eligible or banks don't particularly care for that product. So I really appreciate you bringing this to our attention, and it's something for us to think about. We have to look at all different options for people to have the opportunity, especially low, and I'm going to say economically disadvantaged families, to give them the opportunity for home ownership. Are there questions from members of the committee? Representative Delnicki.
Thank you, Madam Chair, and good morning. Great to see you up there.
Good morning.
So you're basically looking for a study. What aspects do you think this study should cover?
Well, it should, thank you for that question. Good question. If the banking department would look at some kind of, and I know they must have the information in their computer system, but look at what the banks use as a finance in order to get, to have people own these these mobile homes, and look at ways of doing outreach. I'm told that there is no market for it, but that was 5 or 6 years ago. Because of the workforce that we need to entice into the city, this might be something new that we need to start looking at, because we have, there's a big controversy about affordable housing around the state, where a lot of the suburbs don't want to get involved, and mid-sized city like Meriden that has 11, 12% affordable housing. We're doing our part, but this would be looked at differently because there is a lot of mobile homes in the eastern part of the state. There's some in Milford, when I'm finding out. So we need to find out where those mobile parks are, but they don't have to be in mobile parks. They could be on a small parcel of land, and you have a mobile home door, like they do in Montana. My daughter lived in Montana for 16 years, so I saw a lot of them there. But we need to study as to how we can entice young people for home ownership, and look at the percentage rates, look at the programs that are already out there for the down payment assistance program. Why can't they also use that program? There's a lot of HUD counseling agencies in the state of Connecticut that are free, and they will be able to orient and educate these homeowners on how to become a homeowner, and look at the financial risk in taking their first time homeownership loan or mortgage. So there's a lot of things that we can include in that study. So that's what I'm kind of looking for in order to motivate the banks to really give, to allow financing for these programs. I got this report from the Pew Charitable saying that this is not just a problem in Connecticut, it's a problem all over the country. that if it's not profitable, nobody's going to go into it. But we have to be able to use other funding like the Community Investment Act that will entice the national and the bigger banks and the community banks to get into this workforce family housing that we need, that we so badly need in the state of Connecticut.
So when I looked at your concept here, and it stated mobile manufactured homes, that's almost two different things to take into consideration, because I've seen manufactured homes that look great. They don't have any of the aspects of a mobile home, yet they were manufactured in a factory, brought on site. And a matter of fact, I've got one probably about a half a mile from my house on Route 30. So would you want to see it so that the study looks at the concept of manufactured homes and mobile homes as two different entities, or what?
That's an idea. Yeah. I'm open to anything that will make it better for people, young people, to move into the state and make it affordable for them to live in the state of Connecticut. So yeah, we can include that. Whatever you want.
Thank you for your testimony, and thank you for bringing this forward.
Thank
Thank you,
you.
Mr. Chair, Madam Chair.
Thank you. Are there other questions from the members? Representative Doucette.
Thank you, Madam Chair, and thank you, Representative Santiago, for bringing this forward. As you mentioned, it's really a forgotten segment of the market, and especially this year where we're talking about affordable housing everywhere in this building, and we're going to be focusing on that as well in this committee. I think it's great that you brought it forward. I think a study is a good idea, because my first question was which institutions are offering financing for mobile homes, and I think we don't really have a good handle on that in the state, other than, as noted, that there's not a lot of it, and there is a CHFA program. So these are all good questions. So did you submit written testimony? Okay. So I would just ask, it sounds like you've done a lot of research, and you mentioned some places to go to find that information. You mentioned the Pew study and another in your testimony. So I just want to make sure that we are hitting on all the resources that you uncovered on this. I appreciate you bringing it forward.
Thank you. Thank you, Representative. There's a mobile advisory council of manufactured homes.
Right.
So I'll be tapping on them and getting some ideas from them. There was a big controversy years ago. I'm talking like maybe 10, 15 years ago, where mobile manufactured homes were the interest rates were so high at that time, like between 12, 13, 14%. And they treated these mobile homes like a car, like you would invest in them like if it was a car. They really didn't treat them as home ownership. And a lot of that had to be changed. And that was a lot of the advocacy in order to change. But the interest rate still, if you go to CHFA, it's still 6.2%. When you go and apply for a home that's 200,000, 300,000, the going rate now that I see is like 4.9%. So why is it higher for a mobile home that is less expensive and it reaches the right the median salary so that someone can afford it and incentivize people to go to a mobile home? You're paying maybe $400 or $500 worth of a mortgage, and you have to pay a rent for the land that you're using, but it's still a lot less expensive than going into a $200,000 or $300,000 home that you're paying $1,500, $2,000 mortgage a year. So, and then eventually you can sell it and then build the equity and go into buying a regular home. So those are the things that we need to look at, but we have to be able to partner up with the banking association, with the banking department, with the FHA, CHFA, all kinds of programs that are out there, and see what will work for people, because we have to do something. People are not packing their bags from down south or out west to come into the state of Connecticut, because housing is very expensive. And this is one way of tackling the affordable housing issue for workforce people in order to entice them into the state of Connecticut. So it was just an out of the box idea. So we'll see what happens with that.
No,
Thank you.
I agree wholeheartedly. And one of the distinctions that you touched on is real estate versus, like a motor vehicle or some other form of personal property. The law currently treats it more like real estate. It's kind of a hybrid, but it's more like real estate. So it's a very good question, and one I don't know the answer to, and I'm looking forward to hearing more about, in terms of the financing and any, FHA guidelines or anything else that may be applicable that banks look at when evaluating, whether to lend on an asset, whether or not that's something that we need to look at and perhaps tweak to accommodate, more lending for this. But thank you again for bringing it forward.
And
Madam
thank
Chair.
you, and thank you for at least considering it and at least for having this conversation today. Thank you.
Thank you. Are there any other questions from the members online? Thank you, Representative Santiago. Have a nice day. Next, we have Senator Maroney. I know he was at another event. He's not here. Senator Martin.
Thank you. And you're correct. He is at another event, which I am heading quickly after this. Thank you, Madam Chair, Representative Doucette, Ranking Members Berthal and Delnicki. I'm here to testify for proposed bill SB 112, an act requiring Connecticut banks to list account holders or owners on statements. As many of our families have experienced, elder financial abuse is all too common. I'm here because a constituent who I went to high school with and now lives in Avon, and though I do not represent Avon, came to one of my breakfasts and shared with me his story of what happened with his father. In a frequently utilized scheme in which our seniors are preyed upon, an individual, often a family member, gains a senior's trust and is eventually added to a bank or a brokerage account as a joint owner, because, as we know, joint accounts transfer upon death without undergoing the scrutiny of the probate court process. Oftentimes, the name of the co-owner of the account will not appear on the statement. Many financial institutions even offer the co-owner an option to hide their names. I believe that this practice does a disservice not only to the senior citizen, but also to the family and potential beneficiaries. On every statement and tax form produced by the financial institution, it should be made clear, not only in the address field on the envelope, but on the document itself, each and every name of the listed owner of the account. While it is unfortunate that this change can only be applied to Connecticut chartered banks and credit unions, it is a common sense change that will greatly benefit our senior citizens and their families. I thank the Banking Committee for its willingness to hear and consider this issue and look forward to continued discussions on this bill. Thank you.
Thank you, Senator Martin, for your testimony and for bringing this forward, even though it's not your constituent, but I commend you for doing that. And I will note we received, I believe it's Mr. Hine.
Ken, yes.
We received
Haynes,
his written testimony as well, which was very clear in setting forth what the issue is. And, this is something actually that we've looked at almost every year during my time here. I had a bill which passed in 2019 in the House and was included in legislation last year as well about this very issue and the presumption that's created for joint owners on accounts. And I should also let you know too, that we have a bill that we're going to be hearing later this month that the Department of Banking has been working on together with AARP and some other advocates as well, which deals specifically in the financial abuse of elders. The Banking Association has been involved with that. So I need to dig into that. That bill's still being drafted and see if perhaps this issue is addressed in there, or there's a place for this, because it's an important point that we certainly don't want to see the type of abuse and, in its worst case, fraud that happens in some of these cases. So I appreciate you bringing it forward. Any questions from the committee? Senator Berthel.
Thank you, Mr. Chair. Senator, thank you for representing a constituent outside of your district. First of all, that as you and I have talked about in the past, we know that we represent everyone, not just those that live within the boundaries. So I think I understand the issue, and I think what we're really looking to get to is a little bit more transparency in terms of what happens more at the time that the original account holder may pass or be unable to handle their own business, their own financial matters. Am I correct in that?
That is correct. If you follow or you read Ken's testimony, you'll see that power of attorney was granted to one of the siblings. The sibling moved out Midwest somewheres, but on the statements, whether they're various accounts, the senior's name was on the account, and somewheres along the line, then that name changed, and it wasn't until the other siblings realized that the sibling out west had sole power of attorney. The father agreed to change that power of attorney since the sister was living out west, and when they went to the bank to change that power of attorney, the name had been changed on the account, and they didn't know about it. And what they're saying is, listen, had we known, and we would have seen her name on the account rather than their father's. And they didn't realize that she had, and it was a large account, large money in the account where that name got changed, and they didn't even know about it.
Okay, thank you for the clarification there, because I may be mistaken, but I think that there is a requirement that exists today in with our state chartered banks that requires account holders to be listed. This sounds like it may be more, and I think I can't speak for the committee at large. This might be an issue of having to make sure that when there are changes to the names listed on account, that the appropriate family members or legal custodians of those accounts are being notified. It sounds like that, because I think, and I'm thinking about some of my own accounts that I have. If my wife and I are on account, we're both listed. Our names are already there. But if I were to theoretically take my wife off of an account, maybe it has to go to some sort of notification process. I want to work with you to try to figure this out, because I don't know that it's a matter. I'm sorry if the names aren't listed. I think what you're trying to get to is when someone has changed the name in an effort to maybe do something with malice towards the senior that is holding this account, and that is legitimately a problem. I know we've had bills before this committee in the past that have dealt with kind of some elder abuse issues. Right. So I'm willing to have a larger discussion with you.
Thank you. And I from what I recall from my conversation with Ken, was that there's an option on the forms that you can hide the name of the second person on the account.
Okay.
And that's what seems to have taken place here. Right. So yes, I'd be more than willing to have further discussions with all of you here.
Thank you, Senator. Thank you, Mr. Chair. Or Madam Chair. Who's Mr. Chair? Thank you.
Great. Thank you.
Okay. Other questions, Rep. Delnicki? Oh.
Thank you, Mr. Chair. And I just want to thank you for bringing the issue forward. And the comment made by Senator Berthel pertaining to folks that may want to conceal the actual original owner may want to conceal the other folks that may be on the account. I would think that would be something that probably should be maintained only from the standpoint that that's the individual's wishes and what they would want to do with that, their own account is to maintain that. What's your opinion on that?
If the account, I guess, if the original account owner is making that decision, but when you give the authority to a power of attorney, that changes, I believe, who's making the decision, right? So in this case, it was the sister who made those changes and not the father.
Well, thank you for the clarification there, and thank you, Mr. Chair.
Thank you.
Representative, Representative Palillo.
Oh, you guys are really,
Thank you, Mr. Chair. Thank you, Senator, for being here and bringing this forward. And I had a chance to read the testimony from the constituent or from the folks, the family that you're helping. I see transfer on death, which is generally a
Yeah.
beneficiary designation and not necessarily an ownership designation. But I think this is an important discussion to have. And I really appreciate you bringing this up because it does create a transparency question and an acknowledgement that there has been a change, a material change on the account with or without adding an owner. What I would suggest is I think there's 3 different categories that we're looking at, possibly between an owner, a beneficiary, where there would be an automatic transfer of assets on death, and then probably the 3rd category, which some financial institutions already have in place, which would be having a trusted contact where a duplicate statement would go to that individual and or on a material change like this, there would be additional notification. But I do agree with the good senator here that also we don't know this, that on a change like that, there should be confirmation whenever there is an addition or a deletion or a change in a beneficiary designation and or an account owner or a trusted contact. There should be something in writing to then alert folks. But I certainly would like to work with you on this. Seniors are certainly in a vulnerable spot, and they have in some situations conflicting interests within the same family. And it seems like there's something going on here. But I did want to confirm, reading the testimony, is that your understanding that the change was to add a beneficiary to the account, and that's what happened here.
so the DOT, right, and DOT, transfer of death, the trusted person and would have been the power of attorney individual. She changed the name of the account from her father, or you placed it under DOT, TOD, transfer on death, and that the siblings were they knew that there was a change that had taken place because they were receiving the mail, they were picking it up, they were opening up the statement, and they learned at that point, gee, this is transferable at death. Now you're out of probate because of that. It's the siblings, the sister who's on the account now on death, and that created family turmoil. And then when they went to get a new power of attorney to rectify all this, they learned that the daughter had, or the sister had changed the name of the account now to her solely. So, or the bank couldn't give them any information because they were not on the account. So they couldn't change anything on that old account. It was all belonged to the sister. So they had to open up a new account in order to take care of dad now. And I don't know where it is from here, but you could see the what's taking place there. All right.
Sure. It's certainly,
It's
to say the least, a
abuse. Yeah.
difficult
So
situation.
hopefully we can figure something out that will, make it truly transparent to all the parties.
Thank you. Thank you so much for caring and for assisting this family and bringing it to our attention. Thank you.
Thank you. It's so nice to see people here. It looks like you almost have a full committee, but it's good to see everybody. So thank you.
Thank you, Senator Martin. Any other questions? We might go around again.
I know, let me sit back down.
You are excused, Senator Martin. Thank you. again.
Thank you. I'll wait for that next time.
All right. Thank you. Next on our list, I believe I see on Zoom Representative Borer. Welcome, Representative Borer.
Thank you. Thank you so much. And hello to Senator Miller, Representative Doucette, ranking members, Senator Berthel, Representative Zelnicki, all the members of the Banking Committee, all of my former committee members. Thank you for allowing me to speak today regarding Bill 6318, which I eagerly introduced, and I want to thank you all for raising. What Bill 6318 attempts to do is tackle the addiction crisis from yet another angle. So I'm sure you are all aware that when someone is suffering from addiction, it's very hard, it's a very difficult step for he or she to enter into an inpatient rehabilitation program. And for those of you who have had a loved one, whether a family member, a friend, helping that person to take that step is a significant challenge. And for that person who actually makes that step and needs an intense program, staying in and committing to the program is vital. Once someone enters into a program, the person is typically required to unplug from their daily life and challenges, often not even having contact with their family members. And that's usually as part of the detox program and the need to really focus on your physical and your mental health while you are there as well. As such, if they are in a 30-day patient program, they don't have the ability to pay their bills. And we don't want them worrying about their bills and their financial burdens while they are in rehab. Or once they are out, when they leave a program, typically they're in a very fragile state, and the chance of relapse is great, unfortunately. And the last thing we want to see is somebody coming out of a program only to find that they have compounded financial issues because they were unable to pay their bills, and now they have fees on top of that or went into collection. And that's very difficult. That's a heavy lift when you're in a vulnerable state. So what this bill asks is that someone is enrolled or admitted to an inpatient program, a rehabilitation program, and short term is defined as 30 days, that their debt pursuit and their collection be put on hold. And while I know addiction programs can last longer than 30 days, I think 30 days is a fair benchmark that gives the addict a jump on reorganizing, but also doesn't break the bank, so to speak, for the creditors by when they extend or they pause that financial obligation. So I recognize that we can't regulate federally chartered banks, but I think if we start with state chartered banks and credit unions and other type of creditors, it certainly is a step in the right direction. I know that no other state does this, so I think it is a bold step, but I also think it sends a message that we are doing everything we can within our arena to help our residents who are suffering from substance abuse to get well. And before I pause, I just want to acknowledge I looked at the public testimony that was submitted and the opposition. In there is opposition from the Banking Association, but it referenced a different bill. So I don't really know if that's Bill 6318 that they were opposed to. And then there's opposition from the Connecticut Credit Bar Association. But what that opposition says is that there's just not enough details around the program. And I think, when we raise concepts, it's vague. So I understand their concern, but they also offered to help work on the language to put framework around it from their perspective if this bill was to move forward, and I hope it does. So I'm going to pause there for a moment and see if you have any questions.
Thank you, Representative. Thanks for bringing this concept forward, drawing on your expertise and your day job, right? So it's invaluable. We all bring that here to the legislature. So it's good to hear that perspective. One thing I thought of in listening just now, I mean, there are two things at work here where someone is in this situation. One is the issue of the forbearance of the debt, potential forbearance of the debt, which is what your bill speaks to, and working with the individual bank or the creditor or whoever it may be. The other is the credit reporting aspect of it. I wonder if you have any experience or are aware of the credit reporting aspect of this. I think most creditors can report a debt that's 30 days delinquent. I wonder if that's an area that we could also perhaps look at here.
Yeah, I think that would all be part of it, right? So if something is submitted to the bank or the credit union indicating that this person has entered into a 30-day program, they would that would stop that report to a credit agency in its tracks. And that is, something, again, that if you come out of rehabilitation and you're in that fragile state, and then you come to find out you're trying to get your life back on track, and you find out that you have been reported to, for bad credit because you weren't able to pay these bills for 30 days. Anybody who's gone through it, and I have a lot of constituents that have gone through that, it's very hard to explain that once it's been reported and get that off of your credit rating. And now once you have a bad credit rating, right, it's difficult for, to get your rent and to get a car. So it's just a big snowball impact. So if we can kind of stop it before it gets to that point and help that individual proactively, I think that would be, very impactful for them.
No, I agree. It occurred to me as I was listening. I mean, it's one thing to be able to negotiate that with the creditor and you feel, okay, I was able to get myself out of the situation or catch up on the obligation or waive a late fee or whatever it may be. And then only to find out later that it also affected someone's credit. So I think that's another point to consider as we look at this.
Mhm.
Any questions for Representative Boer? Representative Hoxha?
Thank you, Representative Doucette, and thank you, Representative Boer. I think, I speak for most people when I say that, we're all sympathetic to people that are going through, an issue like addiction. It certainly is a real thing. Whether you classify it or categorize it under a mental health condition or whatnot, it certainly is a real thing with real life consequences for many people involved, including the individual going through the addiction issues. My only concern is that it kind of opens up a slippery slope type of situation where what else what other condition or ailment can you make a good argument in a similar fashion to the argument that you're making for, addiction, to then also apply this standard of, essentially, forbearing your, debt obligations for, an X amount of time, which I believe you mentioned was a period of 30 days, which, sounds like a reasonable, kind of compromise there. But what about, people suffering from, other types of diseases, cancer, a broken limb, something that has, in a sense, still incapacitates the person's ability to function as a productive member of society. That I feel like it would just create a situation where, all those arguments could be made for all other types of ailments that essentially, have the same effect as this situation where the individual cannot, go to work and not pay their obligations and things of that nature. So, what is it, what do you say to that type of, situation where you have someone that's suffering from a different type of ailment, but and says, hey, well, I'm not necessarily, a drug addict or going through alcohol, treatment, but I have a medical condition that doesn't allow me to, work temporarily. And, I don't feel I should pay my mortgage this month. And, what say you to that type of situation?
Yeah, thank you for that question. That's a really good question. One that I had, thought about when putting this together. So a couple of thoughts on that. So when you go into a rehabilitation program and an inpatient, typically your phone is taken away. You're to have no contact with pretty much the outside world, right? You are isolated with your medical and your mental health team. So you don't have any ability to reach out and work on your finances. And some of the other medical issues that you mentioned, there is the Office of Health Advocate, and there is a channel and an opportunity to fight that. What this does is brings the mental health in parity with your medical, physical needs, if you will. So there is an avenue to fight that currently for other ailments, but this has not been an avenue that has really been embraced to relieve somebody of their financial debt, if that makes sense.
Yes, that makes sense. And thank you for, mentioning that there are avenues for people in other situations to pursue to get temporary debt, relief, which, I'm not necessarily against that concept. I just think that, it's probably best left between the creditor and the debtor. And a situation where you call, your, local bank, which would be the only type of, situation that would, be relevant here, because, we can't really do anything when it comes to the federally chartered banks. I've, experienced, or have been aware of situations like that, where, customers have reached out to their local banks and have negotiated a temporary type of deal like that. And I think that's really the most effective avenue. And I also wanted to just, kind of bring up the prospect of bad actors. Like with any, law or policy, there's always going to be people that, are looking for the loopholes or looking to kind of abuse, the law or the policy. How do you see that playing out insofar as people that are potentially, exaggerating or faking their condition just to get into one of these programs that maybe somebody else is paying for on their behalf, and trying to get into these types, because these types of programs don't necessarily require like a referral from a primary care physician or anything like that. People can check themselves into rehab. It happens all the time with those that have the means. But in that, like, what would be some kind of safeguard that you envision to be a part of this bill that would prevent something like that, somebody trying to abuse the system and just to get away from their financial obligations?
Well, thank you for that question. Just to address the first part of your comments, I think that suggesting that this is between the individual and their creditor, typically when somebody is at a point where they need to enroll in a 30-day program, they're not in their right mind, right? That's why even making the step to enroll is very difficult. And they are asked to, as I said before, unplug. So being able to negotiate with your creditor is something that's a significant struggle for somebody suffering. To your question around the safeguards, that is a good question as well. And that would, through the language, would be developed, and there would be a communication that comes from the facility on behalf of the individual, and then the individual would have to complete the 30-day program. These are very reputable facilities that are licensed. Their beds are short. They're not going to take somebody that is not suffering from substance abuse and have them stay in their facility for 30 days because they are faking, because they don't want to pay their financial obligation. I don't think anybody does that today. I don't think that would be allowed. And these are trained medical professionals that can understand whether somebody really has a substance abuse problem or not.
Thank you. I have no more questions.
Thank you, Representative. Anyone else? Senator Berthel.
Good afternoon, and thank you, Mr. Chair. Representative, thank you for bringing forth this this bill. I think that it addresses a very compassionate situation and need that that should be before this committee. I do have a couple of questions. I don't know if you can answer them or if perhaps we have to look to other avenues to get the data, but you mentioned in the bill, or the bill specifically addresses 30 days worth of relief, if you will. And I'm just wondering if you have, in your expertise outside of the legislature, if you have any idea how long an individual might be in treatment on average. So, and again, I understand the bill addresses 30 days at a time, but I think it would be important for us to understand if there's some data available, what is perhaps the average time that someone might be in a substance abuse recovery type program. I don't know if you can speak to that or not.
What I do have is thank you for that question. What I do have is some statistics around those individuals in Connecticut who enter into a rehabilitation or a program regarding substance abuse. There's in 2020, that's the latest data we have, there was 23,000 residents that entered into some sort of program, whether it is detox, inpatient, outpatient, long-term or short-term stay. Out of that, only 271 residents completed a 30-day program. 371 residents completed a program that was longer than 30 days. So either a 60-day program or a 90-day program. So unfortunately, I wish it was more of that. We're in a inpatient 30-day program. 271 residents per year is not a lot of people that is going to significantly detrimentally impact our credit agencies, right? Let's say we have 271, let's say we have 20 charter banks. I don't know how many we have. That's maybe like, let's say it's 10 per agency a year. That is not a significant number, but to the person who has entered into that rehabilitation program, it could be a lifesaver.
Okay, thank you. And through the chair, thank you. I appreciate that. I'm glad that you had that data to share. I'm a little surprised by the numbers as well. And I think it's important for the committee to understand what the potential impact would be on our financial institutions, because as we know, and if I dare I take the compassion out of this for a moment, this could be looked at as a mandate on our financial institutions to pause the ability for them to rely on a very, what you have now identified as what appears to be a very small part of their revenue stream. But we have a responsibility when we're looking at all aspects of future laws in Connecticut to look at all of the constituents involved. I also I thank you very much for that. That's very important data. And I'm glad you're able to share that in real time with us. The other concern I have, and I don't know that this is necessarily a question for you, but some of the other testimony that was submitted that you referenced that was in opposition to this is, I think that there's a lot more for the committee to consider with respect to the application of this. And there's when we're talking about pausing more than just maybe a car loan or something, we're talking about other types of debt, whether it's municipal or federal or whatnot. So I think this is a little bit more complicated than the banks committee, but we have worked collaboratively together over a lot of years in this committee, and I think we can probably figure something out. But thank you for appearing before us today, Representative. I appreciate your comments and your answers. Thank you.
Thank you, Senator Berthel. And in that testimony, the Connecticut Credit Bar Association offered to help put framework around what they would need to see a program be successful, but also work for their institution. So I think what I would ask is if we can have the opportunity to sit with both LCO and maybe some members of the Connecticut Bar Association, just see what that would look like. It has to start somewhere, and this is such a significant crisis. And, you know, I think this is an opportunity to help those who are trying to help themselves.
Thank you, Representative.
Thank you, Senator. Senator Miller.
Thank you, Mr. Chair. Good afternoon. Is it still almost afternoon? Good morning, Representative Dorff.
Morning.
I want to thank you for bringing this bill forward. I think as a society, we've removed compassion from the work that we do in all areas, in some areas, and we become more business and dollar oriented as opposed to people. And we have to understand that we live in a society where people matter, and we have to consider them in the decisions that we make. I would like to see your bill go even further to say, let's look at people that are incapacitated, period, for 30 days. What happens if a person has cancer, or they were diagnosed with something and they were hospitalized immediately without their intentions of entering the hospital, something unforeseen happens, and insurance companies are sending them letters denying their treatment. They're not in a position to dispute the cost or the denial. And so their bills are coming in. They have mortgages, other bills that are coming in, and they don't know about it because they're in the hospital. And let's say that they're in a coma, and they survive their illness, and they come out and they have all of these bills that are staring them in the face, and there was no reason. I mean, there was no way that they could address them. And I think that we need to show more compassion to people in certain instances. And yes, there are going to be bad players. And I know the banking industry sees that. But that's America. And I hate to put it that way, but that's America. And that there are bad players, and it unfortunately enters into our businesses and the things we do. And we look at identity theft. And so, and I know banks have to deal with that. And I'm not saying that banks should be mandated to do certain things, but I think that we have to get back to the old banking industry where there was compassion, and you could walk into a bank and the banking officer will listen to your situation and help you out with that situation, rather than always looking at the bottom line. And I truly believe as a society that we have to be different, and we have to do business differently. So I do appreciate the comments regarding that we're responsible for all constituents, but in my opinion, we're also responsible for the ones that are voiceless and don't have the capacity or the ability to lobby or advocate for themselves. So again, I thank you for bringing this to our attention, because I think it's worth the discussion and worth taking a look at. And so your offer to talk to the banking industry so that you could come to some type of agreement, and even to look to see what that looks like.
Right.
So I really do appreciate you bringing this forth, because again, there has to be more compassion in our society. So thank you, madam.
I appreciate that, Senator. Thank you. And I know all the work that you've done as well. So thank you.
Thank you, Senator. Representative Delnicki.
Oh, thank you, Mr. Chair. And thank you for bringing this forward. As a former credit union director, former vice president of a credit union, I can tell you that the credit unions would have that level of compassion. They work with the members, and I suspect that a state chartered community bank would work with people in distress to help them out in their time of need. The big problem is the fact that federally chartered folks, state folks that are banks that are chartered in, say, New York, Buffalo, for instance, they might not have any compassion, or they would have a lack of compassion based on the fact that they have their corporate headquarters not in Connecticut, but in another state. And that's where the problem occurs, because correct me if I'm wrong, members of the committee, we can't force a federally chartered bank or credit union to do anything. And I suspect that a substantial amount of the debt would be conceivably credit cards, and what Synchrony Bank out in the Midwest, I think they pretty much have the lock of the credit cards. It's worthy to have that conversation to see where we can go and what we can do. And quite frankly, what financial institutions would be willing to do voluntarily, because I think there's a lot of good actors in the state of Connecticut. And I suspect that most credit unions would be very willing to work with their members in a time of need. So there are opportunities here, but we also have to keep in mind what the limit of our powers are here on this committee. But again, thank you for bringing that forward. Thank you, Mr. Chair.
Thank you. Thank you, Representative Delnicky. And I just, you made a good point. In my opening, I talked about how we are only able to regulate what's within our arena, which is Connecticut, and that wouldn't be federally chartered banks. But that makes me think that 271 residents who do enter into a 30-day inpatient program, that means that number actually gets cut probably in half, because a good number of our car loans and our mortgages are with those federally chartered banks, right? So that further reduces how much this would impact our state chartered revenue bottom line, because it would be less people.
All right, thanks, Representative. Anyone? Oh, one more. Representative Paolillo.
Thank you, Mr. Chair. Good afternoon, I guess now. Representative Boyer, thank you for bringing this to us. I did want to, you just mentioned the number again, I believe 271. But it's important, as you have advanced this and have done a bunch of work as we've served together the last 6 years around substance abuse issues and helping folks reacclimate and come back to society. But it's just not the 271, it's their families, it's their children, it's the folks that are dependent upon them financially, that this is also going to impact. And I think this is a really great opportunity to come together with financial services to not only look at the folks that are entering treatment, but we're helping families at the same time that have that financial dependence, as we're looking at family units, and as we're looking at, whether it be, we've talked about just now housing today, that comes into this discussion. We're looking at credit, but we're looking at, where kids are being raised as well, as a parent or someone else in their family is undergoing treatment and attempting to come back to better their lives and to better their families' lives. So I think this is an awesome opportunity to continue that discussion. As the representative said prior to me, to have a good conversation, because I think both sides are willing to have the conversation, and certainly I think this committee can advance that. So again, thank you for all of your work. And I did want to ask, either anecdotally or, through your work outside of the legislature, with folks that have reached out to you that are seeking treatment or have undergone treatment, have they had positive experiences with banks in terms of forbearance or having a longer grace period, or having some type of accommodation put in place, Representative?
So thank you for that question. I only know of the difficulty to resolve issues. I don't know what the end result is. So I do know that it takes a significant amount of time and effort to try to document and demonstrate to a organization that you were going through this and you were experiencing this. And I think one of the other issues that I want to remind folks about is, as much as we try, right, the parity between mental health and physical ailments is not completely 100% there yet, right? So talking to an institution about rehab, sometimes it's still a difficult sell, and it's a real issue, as one of the representatives said. So I have had a lot of constituents that have reached out because they have been burdened when they're trying to get themselves better. I don't know if the banks resolved it with them because they didn't, I didn't ask that. And I also just want to mention that I worked for 10 years in banking. I am very sensitive to the need for profitability and bottom lines. And I've worked in corporate for many years as well. So I understand that angle. I'm not unappreciative of that need. We're talking about a small percentage here. And for those that do go into the rehab, as I said before, it could be a game changer. I am somebody, if anybody hasn't had somebody in their life that has suffered from substance abuse, consider yourself very fortunate, because it is rampant. It impacts families, it impacts your friends. It doesn't discriminate who it affects. And, to see both sides of it, to have worked in banking, but also to have been somebody, I lost a brother to addiction. I had a father who was in and out of rehabilitation. I've seen both sides of it. And I think this is just a way for us to be able to help those who are really struggling to get back on their feet.
Thank you for that answer, and thank you for your thoughtfulness and your compassion as always. Thank you, Mr. Chair.
Thanks,
Thank you.
Representative. Okay, I think that's it. Thank you, Representative Borer, for your time today. My colleagues who come to testify before the Banking Committee, be forewarned, you have to clear your schedule for the afternoon, because we like to have a full conversation, and we've certainly done that, and you've given us a lot to think about. So thanks again for bringing this
Very
forward.
appreciated. Thank you to all the members for your questions and for your consideration. Thank you.
All right, take care. Okay. Next, moving on, we have Representative Lanoue next on our list. Welcome back to the Banks Committee, Representative Lanoue.
Good afternoon, Chairman Doucette, Chairwoman Miller, ranking members Berthel and Delnicki, and members of the committee. For the record, my name's Brian Lanoue, state representative from the 45th House District. I got 4 or 5 great towns in Eastern Connecticut that I'm proud to represent now in my 3rd term. I'm here to, and by the way, it's great to be back to see you all and be in the same room. With a heavy heart, I've left the Banking Committee, but it's so great to see everybody again from the committee and some of the new members as well. I'm here to testify in strong support of HB 5207. That's a bill I'm very proud to have introduced this session. And what it does is it makes sure and ensures during the foreclosure mediation process that an agreement that's reached between the bank and the homeowner, that once the agreement is reached, the ink is signed, the first payment cannot be due less than 15 days before the actual agreement was reached. After the agreement was reached. As many of you who know me know, I'm not a big regulatory guy, especially in the lending industry. I think we need to have the flexibility for folks to lend money, and that's what generates commerce and really keeps our economy going. However, there has been an issue that has been brought to certainly my attention, something I've experienced, and that's in the foreclosure mediation process. There has been times where banks have reached an agreement with somebody who is in the a homeowner that has fell on hard times, was unable to make their mortgage payment for one reason or another, was able to get other employment, get back on their feet. And the first payment was actually due. They set the first payment due in the agreement after the date is actually passed. So for example, if the agreement was signed on February 15th, the first due date was February 1st. So we're sort of going back to the future. And then the second payment would have been due March 1st. So it's essentially in less than 2 weeks, somebody who is just recently getting out of hard times, trying to get back on their feet, is getting whacked twice in the same month with 2 back-to-back mortgage payments in literally less than 15 days. So what this does, what this bill aims to do, is simply say that you cannot sooner than 15 business days after finalization of that agreement set the first due date. So if it was around February 15th, the first payment would be due, I think, March 2nd. You can't go before that. That's all it does, and it just ensures that the homeowner has that opportunity to succeed, and we don't want to have an agreement that's essentially going to be set up for failure.
Okay, thank you, Representative Lanu. Thanks for bringing this forward. And, you know, it's interesting. I think you and I came in at the same time. And I think we experienced some, but missed most of the conversations about whether or not this program was really good policy, whether it was necessary. It was enacted, as you know, back in 2009 in response to the foreclosure crisis back then. But I think, you know, your proposal shows, and I think it reminds us at least that, you know, this program that has helped so many people, and that frankly, we hear that the financial institutions are at this point used to working within the confines of this system and this program, that it helps people and it helps the banks as well, the mortgagees come to a resolution, and is successful in the vast majority of cases. And you've given us something here that I think, you know, would be a relatively minor modification to the program. I think it's within our purview, as I've read that statute over the years, to do something like this within the process, and to have the mediator sort of facilitate what we're talking about here, which is just the timing of the payment to be appropriate for the mortgagor to resume those payments. So I appreciate you bringing it, and I'll see if my committee members have any other questions. Representative Hoxa.
Thank you, Chair Doucette, and thank you, Representative Lanu. I certainly appreciate this bill. You know, working, I'm still involved in banking. I still work in the banking field, and you know, the concept of compassion was brought up earlier, and I think this is a good example of that. And compassion is one of the virtues that I hold in highest regard and try to practice on a daily basis. And I think this is a good attempt at that. From my experience, and I've had experience mainly with state chartered banks and local banks and credit unions and things of that nature. I believe in most cases, when an agreement like this has been made through some sort of mediation process, that most banks, at least chartered in the state of Connecticut at the state level, act in good faith and don't try to pull a stunt like that, which is certainly disgusting by all standards. But with that said, you know, obviously if there is a need for codification of you know, something like this into law, to, you know, make sure that, you know, nobody slips through the cracks and bad actors can't, you know, act badly, then, you know, I would support something like this. With that said, it should still, you know, be incumbent upon, you know, all of us to, you know, work with our staffs, work with our staff, respective staffs, to, you know, make sure that maybe there isn't already something like this, you know, on the books, and that it's, you know, not, you know, a redundant piece of legislation that could cause, you know, some mess in the process. But, you know, it does seem, you know, at the very least, like it's very well intentioned and serves a pretty clear cut purpose. And, you know, it does sound like something I would support if there isn't already something that addresses this issue on the books in a similar fashion. So yeah, thank you for bringing this up. And yeah, I have no further comment or question. Thank you.
Thank you, Representative. I appreciate those comments. And you know, I could tell you, you know, as far as being a need for, yeah, somebody had brought this to my attention, you know, a few years ago. I had mentioned it, a constituent, and I was thinking maybe I misinterpreted it, maybe they misinterpreted something. And you know, without sounding self-serving, I've recently gone through this program myself, and it happened to me. And I've learned it's happened to others. So it's happening. Quite frankly, it shouldn't be. And I think we need to give people every opportunity to get back. And I recognize, as people who have mortgages on homes, the bank lends that money, and the bank is fully entitled to be owed that money and owed that those mortgage payments. However, going through this program, through months, and people who are getting back on their feet and getting back with employment and getting out of their financial crisis, we want to make sure that the agreement that's reached is meaningful, and it gives the opportunity for the mortgage holder, the mortgagee, the homeowner, every opportunity to succeed. And we're not asking for months or weeks here. We're literally talking 15 days after. Make sure, let's let the ink get signed. Let the ink be dry. Let the homeowner have a glass of water and get back on their feet, and be able to meet their obligation.
Thank you. Senator Miller.
Thank you, Mr. Chair. Representative Lanu, I want to say thank you. Representative Santiago was a dear friend of mine, and he was compassionate about that particular program. And I know if he was here today, he would thank you. This is representative of who he was. It wasn't about making sure that, not only making sure that families were made whole during this process, but to make sure it was done correctly. And so I want to thank you for bringing this to our attention. And so one of the things that I look for in the legislation that I bring forth is racial equity and compassion. And this is definitely a bill of racial equity, and it's also a bill of compassion. So again, thank you very much for bringing, I should say, a concept. We haven't made it a bill yet, but again, thank you for bringing it to the committee's attention.
Thank you so much, Senator. I appreciate that.
Thank you, Senator. Senator Berthel.
Thank you, Mr. Chair. And I would align my comments with what my good chair in the Senate just spoke to. This is common sense. And I was going to ask you if you had a constituent that brought this to you, and you're sharing that this is something you've personally gone through, is very personal. And I thank you for enlightening us with that. Many times as legislators, we do have personal experiences that drive thoughts and good ideas. And as Senator Miller just spoke to, Representative Santiago would be honored to have supported this. He was chair of this committee up until the time of his very untimely departure and death. So thank you, Representative. And it's good to see you. I wish you was still with us here on this side of the desk, but I know you're doing other great things throughout the legislature. So thank you. Thank you, Mr. Chair.
Thank you, Senator. And I'd like to just add too, I was as a freshman and being the first year in the legislature and on the committee, the banking committee for the first year, as Representative Doucette was, we were kind of aligned and we're in the same we were walking in each other's sandals. I call him Zeke. Zeke Santiago was a tremendous human being, a very caring man, a great chairman of the committee, and just made us feel very welcome and open. Really welcomed that open dialogue, and I was very appreciative to get to know Representative Santiago, and I think it's very appropriate that this program was named after him.
You're here. Agreed. It's good to hear his name. I think Representative Delnicki may have a question as well.
Yeah, I'll keep it brief. I want to thank you for bringing forward in the discussion we had prior pertaining to this issue, because this is the kind of issue that we want people to be successful when they work to make things right, when they avoid foreclosure. And the last thing we want to do is to see a tripwire set up before them that could cause them to fail in that effort. And literally that short period of time that you're discussing here could make a world of difference and take the program to a much more successful level. And having had the pleasure of serving with Ezekiel for a short period of time before he met his unfortunate passing. I know that this is something that he would have wholeheartedly supported. And again, thank you for coming forward with that, Representative.
Thank you, Representative. I appreciate it.
Thank you, Representative. And we'll continue to go around. Representative Palillo has a question.
Thank you again, Mr. Chair. Good afternoon, Representative. Thank you for being here as always. Quick question. This wouldn't change, and I'll say that I appreciate you bringing this forward. This is practical, common sense, and is going to assist so many folks. But this wouldn't change interest calculations or grace periods or anything along those lines, just the first payment.
Yeah, it would not. Matter of fact, those 15 days were that 15-day buffer. I mean, interest and the money that's owed even during that period would still occur. So absolutely, that would not change any of that. This would it's just a matter of structuring the debt and when the first due date for the payment is due.
Thank you for that clarification and thank you for that information, because it is so practical. And when you're servicing debt from both sides of the agreement, to make sure that the first payment, the first month, first quarter, everyone is aligned, because that's going to generally prove to be a more successful contract, certainly, and benefit all parties involved. So again, thank you for this common sense proposal and your thoughtfulness today, certainly. Thank you for being here.
Thank you, Representative.
Thank you, Representative. So I think those are all the questions. Again, thank you for joining us back at the Banks Committee. And we appreciate your testimony today.
It was my pleasure, Mr. Chairman. Always a pleasure. Thank you so much for listening.
Okay, next, Representative Rochelle is next on our list. Welcome, madam. Good to see you.
Can you hear me okay now? Okay. Again, thank you for having me here today. I am here to discuss HB 5537, a bill that I introduced this year in the hopes of having your strong consideration to move it forward. And it really stems from an issue that started with trying to help a constituent in my community and then discovering something that seems to be a much more broad issue that I'm hoping we can address. I had a wonderful constituent who volunteers in the community and is very engaged and caring. And she calls me and says, I can't walk anymore. I need services and care. I'm trying to apply. I'm caught in this kind of paper trail maze. And being that she's a senior citizen and she's homebound since she does not have a motorized wheelchair, she's unable to, and she does not have internet service or a computer. She can't print her bank documents to get her application properly processed with DSS. And so, I did what I could to help her and got that straightened out. And then in my process of doing that, spoke with staff from social service agencies who indicated that this is not a unique issue where, there was two issues. One is that she was told by her bank when she called it that they would require $5 per page for the 5 years of look back she had to submit to be considered for assistance. And you can imagine how quickly that adds up. I learned that DSS can request those documents directly, but they just don't get a response fairly often. They're not getting the documents before the timeout period for the federally mandated deadlines for processing these applications. So folks are getting caught in a catch-22 where they either have to come up with hundreds of dollars that they don't have if they're applying for these services, or they can hope that DSS gets lucky because they're not getting these documents in time. And so folks are having to start from square one, 2-3 times. And meanwhile, those who need it most are really having their services delayed because of it. So I did some digging because we want to make sure this is not anecdotal and that this is actually an issue. So I started asking for information, which I'm going to provide to you regarding how many people apply, for these types of services per year. And then I also spoke to a lot of nonprofits. You'll see their testimony submitted written form for today's hearing. And you'll notice that one nonprofit indicated that they had a 90-year-old woman with dementia, and the bank tried to charge her $900 in order for her to get the paperwork needed for her DSS application. So this is clearly not workable. This is not working, and it's really not humane. But here's some figures and numbers for you on where we are with things. DSS currently has identified 110,000 individuals in the state of Connecticut who are enrolled across various programs. The majority of those programs being Medicaid coverage groups for the aged, the blind, and disabled, broadly known as Husky C in Connecticut. A subset of those Husky C Medicaid enrollees, about 38,000 as of December, are long-term service and support clients. It's important to note that the look back period for those clients is the 5-year look back. And so we're looking at, these are folks who are, aged, disabled, need long-term care, and often do not use online banking, often do not have a computer and a printer, or may have mobility issues, making it very difficult to get this type of documentation. So my bill proposes that we regulate the banks that we can regulate to say if an individual is seeking their bank statements for the purpose of a social service application, whether directly from DSS or any of these state nonprofits that service and processing these DSF cases, that they cannot charge $5 a page, that they have to waive the fee, and that they have to instruct their staff and their online portal to ask this question, because residents don't know their rights if we do make this right available to them. And finally, we want to make sure that DSS does not have this issue where they're contacting these banks directly on behalf of the residents with their permission, requesting these documents and are just not getting them. So I'd like to put in, I had put into my, into the original bill proposal, 25 days grace period for the banks to get this paperwork back to DSS upon discussions with DSS itself. And they put in their testimony that 10 days is a much more appropriate time frame so they can get their paperwork processed as well. I think that we need to put some teeth in this and say, hey, if your business is not working in the best interest of the consumers and providing documentation in a timely fashion, and it's causing DSS staff to have to do work 2 and 3 times, and it's causing our most vulnerable to have to wait for really critical services. If you don't want a staff to provide service in a promptly fashion, we're going to fine you if you are not adhering to this. And I think that would light a fire and make them understand that there's real human suffering on the other side because of these delays. And I think there's something that we can do here to resolve this and efficiently do so.
Okay, thank you, Representative. Thank you for bringing this forward, shining a light on something I think that was certainly new to me. And one of the things I learned is that we do in fact have a statute which speaks to this. But it sounds like from the testimony we've received and the others who have offered testimony to us, who I think we're going to hear from later, certainly the statute may not be working as well as we would hope. I wonder, I know you've done quite a bit of research and talked to quite a few people about this. In your research, are you aware of how other states may treat this? Because obviously it being a Medicaid program, it's happening, people in all 50 states, or if there's any federal regulations or the Federal Department of Health and Human Services has any policy on this or anything like that?
So I have done some research through the Office of Legislative Research. There is not any federal regulation currently on this issue, though I have spoken to members of our congressional delegation who are very interested in trying to create some going forward based on the information that has been come to light with this. I do know that I'd love to see what regulation there is in place currently. I did ask OLR about that. I don't have information on other states yet, but I'm happy to do the legwork on this. The client that brought this to me while waiting for to try to get her paperwork and spending hours on the phone and pleading and begging and not being able to scrape the money together to sort this out. She fell multiple times and she's in a wheelchair and couldn't get up herself. She's burnt herself trying to cook because she couldn't have access to a home health aide that she needed. And I'm certain this is not a unique circumstance. And I think we can do better. I will just also point out that there's about 6,600 applications a month that DSS gets. That works out to about 80,000 applications a year. So while they currently have 110,000 folks under them, they're processing or trying to process or repeatedly processing a large amount of applications.
No, you're absolutely right. And we've talked about compassion already today in
Yeah.
the hearing in the context of other bills. And, you know, certainly that process, I know we've all known many people who have gone through that process where they're in urgent need to get into a nursing home or you know, receive services. And, you know, if you have family to help you navigate, and, you know, it's almost like a full-time job as it happens, and those applications and attention to assets and everything else, you know, it is tough. So if we can help at all in that process, certainly I think that would be a good thing to do. Any questions? Anyone? Representative Hoxa.
Thank you, Chair Doucette, and thank you, Representative Rochelle. Just a quick question. Would your proposal here include language to also waive any fees associated with document production by the banks? Would that be a part of your bill?
Are you asking about waiving the fee that would be charged to the constituent? Yes, that's the first section of the
Correct.
bill. Yes.
Okay, so that would be a part of the bill, and in addition to everything else,
Yes.
it would be
Do
that
not- yes.
any kind of documents requested by a customer for DSS purposes, the banks would have to waive the fees for producing.
Applications to social services that require
Understood.
documentation.
Okay, thank you.
Thank you, Representative. Anyone else? No? Seeing none? Thank you again.
Thank you.
And like I said, I think we have some folks who are going to be testifying on this as well on our list. So I look forward to hearing from them as well. Thank you. Okay, Representative Nolan. Welcome, Representative Nolan. Thank you for your patience. Good to see you up there, sir.
How are we doing today? Good afternoon, members of the Banking Committee, Chairman Doucette, Chairman Miller, Chairwoman Miller, excuse me, ranking members, Representative Delnicki and Senator Bertha. My name is Representative Anthony Nolan. I represent New London's 39th District. Thank you for allowing me to come before you this morning or this afternoon in regards to testimony and support of SB 658, and that concerning first-time home buyer mortgage loans for properties in certain locations, especially distressed municipalities. This bill was introduced by Senator Maroney, Representative Sims, Representative McGee, and Representative Delaney and myself to try and get to you guys to visit and do some work with it. In regards to, for me, all of us have very similar concerns in regards to trying to bring this forward, but the city of New London is largely a working class area. The median household income is well below the national average, 40,000. On Connecticut's list of distressed municipalities, our city ranks third. Many of our residents are recent immigrants. They are service workers, they are healthcare workers. They help in the food industry and man our stores. While these jobs are important, as we know during COVID-19 pandemic, these workers were overlooked and underpaid. In turn, they're vital, yet lower paying jobs do not allow for them to qualify for many mortgage loans. These essential workers are trapped into renting with very little hope of owning. The median age in New London for our residents is 31. Most first-time home buyers tend to be younger. Therefore, their lines of credits are much lower than those that are more senior. These younger individuals are forced to take on loans with higher interest rates, and their home equity is in turn much lower than those who have previously owned. Residents of New London are just as worthy as those in surrounding wealthier communities, needing to own and invest in both their homes and themselves. Housing, as we know, is a human right, and we struggle with that quite a bit in Connecticut. And due to systematic inequalities, many of our communities have been barred from reaching this important personal milestone. New London is strong, vibrant, and a prideful community. We work hard, we love our children, we care about our future. For too long, the barriers to home ownership has been placed out of reach. Many have been told if they work hard enough, the American dream could be theirs. But each time we have approached the finish line, it's moved once again. Home ownership is a symbol of accomplishment for our community, not simply just an investment. It's the only investment that matters. Our residents, for our community, it's not simply a smart investment, it's the only investment. Our residents deserve the opportunity to make a house their home, to build generational wealth where it has not previously existed, and to empower our people with their rightful sense of pride. And those are things that have been spoken and are important by residents. So that's why I come before you.
Thank you, Representative. It's good to see you today. Thank you for coming here. And within our charge, obviously, as the banking committee is to have cognizance over all things related to home finance and mortgage and mortgages and secured lending. This is an important issue for us this year. So I'd also invite you back to we are going to be having conversations throughout the session with CHFA as well, which offers, as I'm sure you know, a lot of great first-time home buyer programs. We have the Time to Own program, which has been extremely successful, and which we're going to be talking about what the next biennium at least looks like as far as that program goes. I think that's a program that certainly is going to help people, has potential to help people in New London and all over the state. But I thank you for being involved in the conversation. With specifically, you know, the bill, the proposed bill, when it comes back from LCO, may or may not always match exactly what the introducers are looking for. The bill mentions a website specifically or program specifically as well, suited to distressed municipalities or federally designated opportunity zones. Is that sort of where your focus
Yes.
is in thinking of this?
Yeah.
Okay.
It's real important to give them a step so that they can go directly to an area that can actually show existing places what they
Yep.
can look at.
Okay. And I think most of CHFA's programs do match that. Those programs over the years, you know, change in terms of criteria and where we're sort of targeting at any given time. But you know, it is important as we have these broader conversations too about zoning, about bringing affordable housing options to places that don't have them. You know, it's good to remind ourselves as well that the need for housing is everywhere. So again, I appreciate the conversation, and we're going to keep it going, I can assure you, on the committee. Any other questions for Representative Nolan? Okay,
Thank you, gentlemen.
thank you. Okay, next, Next on my list is Commissioner Designate, Andrea Barton Reeves. Madam Commissioner Designate, we also
Good
have,
afternoon. I'm hoping you can hear me and see me.
thank you. I didn't have your name. I have Jennifer's name, so I did not.
Okay. Yes, we are all here. So
Welcome.
thank you. Thank you. Thank you for the time. And I won't take up much of your time because Representative Rochelle actually covered much of what I would testify to. So Co-Chair Miller, Co-Chair Doucette, Ranking Member Delnicki, Ranking Member Berthel, and distinguished members of the committee. Thank you for having me here this afternoon. As you mentioned, I am Andrea Barton Reeves. I'm the designee, the Commissioner designee for the Department of Social Services. And I am here today to offer support for House Bill 5537, an act concerning requests for documentation from banks made pursuant to applications for social services. So Representative Rochelle covered quite a bit of what we would have covered in our testimony, so I won't repeat that. What I will say to the committee is that the urgency around this issue is great, and we're actually quite pleased that she's raised it. The population that we serve is quite vulnerable, and they're applying for benefits in part because of that vulnerability and the lack of resources and the resources that are needed for them to live with dignity. So the last thing that they really need is to pay really significant fees for access to their bank records so that we may comply with the federal law, which says that under some circumstances with certain types of benefits that we provide, we have to do a 5-year look back. We have to determine whether or not that individual qualifies for that benefit and continues to qualify for the benefit. We often do hear quite a bit of feedback that we should waive that because a person's circumstance doesn't change over time, and there shouldn't be a need to have this redetermination again and again. And we hear that and we appreciate that, but most of this is really driven by compliance with federal law. So both the agency and the individual have an obligation and a need to comply with that. So we're asking our banking partners to help us meet that need so that there's as small of a gap as possible, in ideally no gap in any of the benefit that a person would receive. And that this really important piece of information that we need, that's really critical in many ways, determining the eligibility for benefits, is offered in a timely manner. And in addition to that, we have a maximum of 90 days in order to make a determination and make benefits available. Again, that is federal law. So in order for us to meet that need and also meet the needs of the people that we serve, the quick turnaround time for a bank is really very critical. We're also in support of the waiver of the fee because, as Representative Rochelle had just testified, that fee can be just completely unaffordable and onerous for the population that we support who really need support. So $900, $1,000, in some instances, even $20 can really pose a significant barrier to applications for benefits. So it's for those reasons that we are fully in support of this bill. We thank you for your time, and I'm happy to answer any questions that you have. I'm also on the call with my colleague, Jennifer Cavallaro, and we're both here to answer any questions that you might have. So thank you.
Thank you, Madam. I appreciate that and appreciate your expertise on this issue. I suspect we may reach out or lean on you with some additional questions as we look at this. One question I did have, and you answered part of it, is the maximum time frame or the deadline, as it were, for the applications to be submitted. I wonder, are you aware of instances where you've blown through that deadline because of this issue, because of the inability to actually get statements because the institution has not, according to the applicant, been able to provide them?
Yes, so we can see if we can get you actual numbers, but I can report to you anecdotally, this happens quite frequently. And we always work with the applicant to try to extend the deadline. But that necessarily means that our eligibility determination is delayed and then their access to benefit is delayed. And when you are relying on that benefit to eat, to remain in your long-term care, to do any number of things that are important to enhance your quality of life, that delay, a day, a week, can feel like a lifetime, which is why this is important. It's quite often that we will extend the deadline because we don't have the banking records in a timely manner, but it's far from ideal.
Yeah. And are you aware, has DSS had any conversations with the Department of Banking on this issue at all over the years? There is,
Not that I'm
a li-
sorry, Representative.
there is a statute that is presumably addresses this issue, but it was my first time hearing of it, and I'm sure others had the same experience.
No, I personally have not. My staff counts, I think I'm on day 28 in my role. So I personally have not had those conversations as yet, but I know that it has been a continuing concern. And so over time, there has been concern raised about what can be done. It is very common for our own teams to contact the bank personally, especially for people who have significant challenges with communication because of age, because of any number of reasons. We will pick up the phone and call the banks ourselves, but there are barriers to that as well, because unless we have a legal permission to access and even have those conversations, sometimes that's not fruitful for us either. So we try to do the best that we can. We can certainly continue to have conversations with the Banking Commission and the commissioner, but this legislation would be very helpful in that regard as well.
Thank you. Appreciate again your expertise on this. Any other questions from the committee for the Commissioner Designate? Which is a long name, but again, appreciate it. And to your staff and Jennifer as well. And like I said, we may be reaching back with additional questions. Thank you.
Thank you. Appreciate your time.
Thank you.
Okay. Next on my list is Bill Marone, who I believe is signed on to testify remotely, but I'm not sure if he is in the Zoom room. I don't see him. Bill Marone going once. Oh, okay. Guess you're just joining us now.
Unmute, start video.
There he is.
I have a face for radio.
All right. Attorney Marone, thank you. Good to see you.
Good to see you as well.
Joining us.
Very good, thank you. I'd like to take an opportunity to thank the committee, chairpersons Doucette and Miller, ranking members Berthel and Delnicki, to offer testimony, which I would say is mildly in opposition to proposed House Bill 6318. And I say that because conceptually, I did not think I would be here in opposition. I actually thought that potentially I could be here in support of. Similar to Representative Boer's comments, if you haven't been touched by the disease of addiction and the difficulties that can cause, then consider yourself blessed. And so I've had that personal experience within my family, and so I represent and applaud the efforts being made. My concern surrounds execution of the concept. As Chairman Doucette represented or inquired during his question to Representative Boer, you touch on federal law, like the Federal Fair Credit Reporting Act and a furnisher's requirements under that law to provide accurate information. In that context, they would have to work with the Metro 2 guidelines, which is sort of boring, geeky stuff, but that's sort of the electronic submission of accurate and complete information of a credit file. And so they would have to work with their vendors to find a appropriate accommodation program to put this under. And it would put our state chartered banks and our credit unions in a sort of different scenario and different situation than their national bank and other federally mandated or regulated partners. So I think that was a good question, because it does sort of indicate the difficulties and the expansive nature of pausing a debt obligation. At first blush, you think, okay, well, 30 days, you give an opportunity to let the pressure release, and I think that's something that could be done. Representative Delnicki had talked about, his experience would be that, creditors and lenders would universally work with their membership or their account holders to come to some resolution that worked. And I think that is very astute observation. We had very real and very proximate tangible evidence of this when COVID struck. All the banks and credit unions, and I see Bruce Adams and I see Art Corey, industry members in that space. They worked directly with their membership. They worked directly with the governor's office to come up with accommodation programs that fit those in distress. And I think similarly that most lenders and everybody else in this situation would deal with it similarly. It's not a question of can we do compassionate work to people that need it the most, because I heard that word in all the testimony today, and I think it's a good and viable approach. A healthy borrower who comes out of treatment
Can you
is
wrap up your?
absolutely. I would like the opportunity to continue to work with both the committee and the sponsor of the bill, Representative Boer, to see if we can find a path to achieve the goal without sort of trampling over and disrupting ground and creating an unequal playing field for our state regulated institutions compared to their national counterparts.
Thank you. And as you heard in her testimony, I believe that she's open to that.
Absolutely. Absolutely.
Are there questions from the committee? All right, seeing there are no questions, thank you for joining us today.
Thank you, Senator Miller. I appreciate it. And thank you, committee.
Thank you, sir. Next, we have Art Corey. Can you turn on your microphone, sir? Thank you.
And members of the committee, it's good to be back in person testifying here with you today. I'd like to talk about a couple of bills. A lot of comments have been made about these bills already, so I'll keep it brief. The first is House Bill 5537, which is the Department of Social Service bill that would require banks to reply with documentation when somebody's applying for benefits within 25 days. There was reference made to the statute that already exists that gives the commissioner authority to compel banks and literally anybody else who might hold funds or property, not just banks, to disclose information about that. The commissioner has actually subpoena authority in that statute. And if there's a failure to comply with a subpoena, can issue a $50 fine. There isn't a timeline for a response in that statute, but the statute says upon request, which suggests to me that it must be a prompt response. And I think you'll hear from Lynn Giroux from our membership, a bank at Essex Savings Bank, that a good example of how we believe most, if not all of our banks comply with these types of requests. So again, there's already a statute. We think it gives the commissioner tools to compel the production of these documents in a timely fashion. Those tools just need to be used appropriately. The other bill I wanted to talk about was Senate Bill 112. This is the bill that would require listing account owners, possibly beneficiaries, on account statements. I'll just add to the conversation there that our banks are run into this issue day in and day out, where customers are asking for beneficiaries to be added or other joint owners. And oftentimes they'll say, I do not want my account statements to reflect these individuals. I consider this to be a private, especially in the beneficiary situation, a private estate planning choice that they make. And oftentimes they do not want and instruct the bank not to have those names appear on the statement. So that would be a very problematic change if that were to be required. Those are the comments I wanted to add to those. I'm happy to answer any questions about those or any other bills that I think have come up today that affect banks.
Thank you, Attorney Carney.
Yes.
Are there to my ranking chair, Senator Berthel?
Thank you, Madam Chair. And Mr. Corey, sorry I came in a little late. I was speaking with one of your colleagues out in the hallway. So we're on 112, which we heard testimony on earlier. And I think the question that I had asked was with respect to whether this really has to do with an issue of notification of a change to someone who's on the account. Because from my own personal experience, having worked for a federally chartered credit union here in Hartford, actually, we actually had situations where this had happened. Someone came in, was a bad actor, and wanted to take their sister off of the account and the brother wanted to go on because the mother was infirmed and couldn't make her own decisions. And if I'm understanding what the intent of 112 really is, it's to prevent that bad actor from doing something like that. So if there was a process for notifying concerned parties, and I don't know how, I guess it's a family matters issue, right? And who should be getting notified about grandma's account or the mother's account, but I'm just not sure how we actually get to the root of this. And I don't know if you can shed some light on that for us.
And thanks for the question, because it raises the issue of elder financial exploitation, which I know this committee and other committees are going to deal with this session, as there are many bills that will attempt, including ones that we support and have helped drafted, the Department of Banking's bill that will be coming up in this committee. So one of the problems with notification to individuals who might help in a situation is privacy. Banks, credit unions, other financial services companies are subject to very stringent privacy rules here in the state of Connecticut and on the federal level. So if as was suggested earlier, you could notify a child about something that may be inappropriate, like the naming of somebody on an account who shouldn't be on an account. Those rules would prohibit the bank from disclosing that unless there was some mechanism like a trusted person that could be named on an account. And I believe that the bill that we have worked on in the past with the department and this committee, would allow for that, would allow for, in the case of elder financial exploitation, the naming of someone who a bank could talk to let them know about what's going on. When I was in private practice before joining the Bankers Association, one of the things I did, I represented all banks on a weekly basis, was deal with elder financial exploitation in connection with the banks. And the banks are always in the middle of these situations, and they're constrained by number one, the privacy rules, but also oftentimes when an elder person is being exploited, they know they are not incapacitated in a sort of mental health sort of way. They are oftentimes lonely and just want to believe whatever the truth is of the relationship that they think that they have, and they have every legal right to do with their money what they want, and a bank could be liable if they said, no, we're not going to give you your money right now because we think there's a problem. So I think there are other ways to address this other than having these names on these statements, especially when many individuals do not want these names to be on their statements. Now, banks do offer the choice to have for customers to have whoever they want named on these statements to be on there. So that's a possibility, but that's the customer's decision.
Okay. Through you, Madam Chair, thank you. I appreciate that. And that's why when I was looking at 112, and even when we raised it, I wasn't sure. And I think you've done a good job of further not convincing me that this legislation would actually get to what the legislative intent is here, which I think is authentic and important. But I don't know that this is what we've got in this bill is the way to get there right now. And I remember, Madam Chair, if I would just for a moment, I recall maybe last year, a couple of years ago, there was a bill before this committee that actually was looking to, if someone came in and, you talk about the aspect of someone, an elderly person being lonely, they befriend someone who is a bad actor. They're looking to act with malice towards this person to get access to their bank account. I thought at one point we were looking at a bill that would have put you couldn't just walk into the bank or the credit union and empty the account in one day. There was going to be like a 5-day or a 15-day cooling off period. And if I remember correctly, we couldn't do this because of some existing either federal or state law. We weren't allowed to say what you just said a moment ago. We can't not let you have your money if all of the parameters regarding the access to the account and who owns it and joint ownerships and payable at time of death, all of that is in place, then that's in place. Those are the regulations. So I don't know, again, if this bill, I don't know that we're getting where we need to be with the language that exists right now. And I would ask, and again, I can't speak for the committee at large, but I would love to work with you to figure out what the right language should be to accomplish this this task here. Because I think it's important. I don't want to diminish that at all. I think there are some bad people out there that are trying to do bad things to people and to others. And if we can fix that, we should. So thank you, Madam Chair.
You're welcome, sir. Representative Delnicki.
Thank you, Madam Chair. You made a reference, Art, to other ways, and you touched on it briefly. Can you go into that in a little more detail? I think that would be something that would be of interest to us.
Right. So, where somebody is with a power of attorney, or it's a child that is maybe listed as a joint owner on an account, that and they do something that's inappropriate, that's going to be elder financial exploitation in the case of an elderly customer. And I think that the bill that we're working on with the department to stem elder financial exploitation will give banks a couple of different tools potentially. One is to put a pause on the transactions that they think are inappropriate, fraudulent, and that'll give the bank the time to and the legal cover, if you will, to contact the Department of Social Services, which they do all the time, and also to contact someone else who is maybe on the account, another joint owner who is just on for convenience, or another power of attorney, and say, hey, are you aware that this is happening? Another tool that I think will be considered is without having to go through the formal process of executing a power of attorney or whatever it might be, is to come up with some kind of form that allows somebody to say, hey, it's okay. I consent to you, bank, talking to my child or spouse or whoever it might be, so that, again, the banks don't violate privacy rules, someone who's not on the account. So again, we have to make sure that we have consent to talk to these people. There's no issue with talking to the Department of Social Services. There are laws that permit that and have exceptions to the privacy laws on that. So mechanisms like that, and our banks are extremely well trained and they have to be by law in detecting elder financial exploitation here in Connecticut, and they do this every day. These customers, especially elderly customers, will come into the branches in person more so than any other customers. They get to know them very well. They know the patterns of their financial behavior. And when somebody starts asking for $10,000, in cash in a giant envelope, they know something's up. They'll call someone like me or somebody else and say, what can we do? This person seems to be completely fine and they're just making a bad decision. What can we do here? And Department of Social Services is a great option, elderly protective services, but honestly, a lot of times a better option is a trusted person. So if we could have somebody that is named as a trusted person that we could talk to, that'd be helpful.
You touched on something there that just raised a flag for me, just to follow up on patterns of transactions and whether that would create some kind of suspicious activity report that somehow could be reported to, again, I'm trying to think of what agency it would be, or would it be reported to a fiduciary that would then look into the situation just to make sure it wasn't a bad actor?
So anytime a bank suspects any criminal activity, which would include elder financial exploitation, they have to file what's called a suspicious activity report. That goes to the federal government.
Yep.
Financial Crimes Enforcement Network. It gets circulated back to the states, to Connecticut, to the U.S. Attorney's Office, to the FBI. And depending on the level of the fraud, the amount of money, there'll be some reaction from the local FBI and U.S. Attorney's Office. Elder financial exploitation is, if you look at the statistics for suspicious activity report filings, is one of the highest reasons that banks file these things. And banks in Connecticut file hundreds of thousands a year of these suspicious activity reports, because fraud is really they're repelling it, trying to repel it every day. And this elder financial exploitation is one of the worst forms of it that they have to report on.
Do we have any idea how often those reports lead to some kind of action to correct the situation?
I don't have those statistics for you today. We can certainly provide those to you in the committee, Representative Delnicki. I don't think it's small, although the number of reports that if I share those statistics, you'll be surprised, I think, to see how many of these reports get filed just by Connecticut financial institutions every year. But there is often a response, I would say, and it may not just be the FBI. The FBI works in task forces with local law enforcement, so there might be a referral of some kind to a local law enforcement agency or the state police, some kind of fraudulent task force that they occasionally partner on. So it's not infrequent, but small dollar. They just don't have the resources to respond to every one of those.
And do you see something like that if it's built out in some fashion as a possible answer to what we're looking for here?
Oh, absolutely. Yeah. We just saw New Hampshire pass a bill a couple of years ago with, that includes many of the tools that we've talked about today to help stem elder financial exploitation. And especially, where you're taking a pause on a particular transaction, that can have an incredible impact on the fraudster who may just go away, right? Because they know that something's happening, or they don't want to wait around. So, I think that these would be very effective tools for financial institutions to have, because now, at this right now, the way the law is, their hands are a little bit tied in that regard.
Well, thank you for your answers there. And thank you, Madam Chair.
Thank you, Representative Hoxa.
Thank you, Madam Chair. Thank you, Mr. Corey, for your testimony here. I just wanted to add that, Senator Martin, who was our first, testifier this morning, I know him personally. He's actually a constituent of mine, and I'm a constituent of his. He is, always looking out, for his constituents, and sometimes even people that aren't his constituents. As is the case with, the written testimony that was provided for, his friend that now lives in Avon. Sometimes, those types of situations, ask for, a remedy to be provided. But sometimes that remedy may not, the remedy that is put forward may not necessarily be the one that is, best equipped to prevent that type of situation. And, there's various, federal and state privacy laws and things like that make it difficult to kind of operate in that sphere. And, working in banking myself on the retail side very recently, or not too long ago, I saw a lot of elder abuse, a lot of instances of people attempting to take advantage of, the elderly. And, it's very heartbreaking, especially when it happens to, someone that has very, very little in their bank account. And, it's very heartbreaking. And I certainly understand where the senator is coming from and wanting to prevent, the exploitation of elders in any way, shape, or form. Unfortunately, I mean, if someone willingly puts an individual on their account, both people sign, they sign, a signature card or an agreement of some kind, and that account is now owned by both people. And it's not necessarily up for interpretation by the bankers, the branch managers, or anyone like that, unless there's some clear signs of duress or extortion or something like that. But if it's a pretty ordinary kind of interaction, then we usually do need to abide by the requests made by the customer, which in some cases may be to add someone that may act unscrupulously in the future. So it's one of those very difficult situations. And I think, legislation that dives deeper into the issue might be the path. And, I just wanted to say thank you for your testimony. And, I certainly look forward, as I'm sure other members of this committee as well, look forward to working with you and maybe crafting such legislation that really does do more to prevent those types of situations in the future. Thank you.
Thank you, Representative.
Thank you, Madam Chair.
Thank you, Representative Paolillo.
Thank you, Madam Chair. Thank you for the opportunity. Thank you, Art, for your testimony today and for the testimony that you submitted in writing. It was extremely helpful to review in advance for today. I wanted to go back. You've mentioned a couple helpful pieces of information today, but I wanted a clarification on trusted contact or having that option available for customers of banks right now in Connecticut. Do they have that option right now when they're establishing a bank CD or when they're coming in to review what it is they have with the bank or on a checking account or any financial vehicle or instrument that the bank is offering to them or that they've engaged in some type of relationship? Do they have that option at account opening or at any point in their relationship to add that or to have that option?
They certainly have that option legally to do that. They could, it would be a form that the bank would use to say, I, the customer, authorize the bank, ABC Bank, to share account information, account records with my child. Not have them be on the account, not have them be able to make any transactions, but to share information, to have the bank reach out and talk to them. That would be a form that, there are some banks that have that, that have sort of an authorized person. I wouldn't say it's widely used. And I think part of that is the concern due to, the sort of the legal nature of it, drafting it, the privacy issues that are, but if you had a state law that, sort of permitted it, well, sanctioned it, I guess, there's nothing that prohibits it now. And then, the banks could look to that and say, okay, let's adopt a form that, that this state law now, for instance, an elder financial exploitation bill law now sort of gives us support for. But yeah, nothing would prevent them from doing it now legally.
So it opens up a couple questions in my mind, because if you can, maybe go to a bank and if there is a financial advisor there and there's a relationship between the bank and that financial institution to set up investment portfolio, for instance, with an IRA, and they're moving some money inside of the bank that they currently have into an IRA account. Certainly, with most financial institutions outside of a bank, regardless of where they're stationed or headquartered, and that advisor is able to set them up with a trusted contact. So they can be under the same roof as you're setting up a checking account or bank account or CD. One side of the house says, maybe we have that, but then you go into an office with a financial advisor, and as a result of your relationship with the bank, you get set up with company A for a mutual fund, and you can have that very same protection that maybe the bank is not offering you under the same umbrella that you're in. kind of have some questions there as to, you know, I understand there's compliance issues, but I'm sure banks have lawyers on staff. And the banks that you represent have attorneys on staff that they would be able to have that available to all customers, since they probably get that when they are engaging in that other financial institution, again, affiliated with your banks.
Or even not affiliated, where, and that I'm sure it happens all the time, where the outside investment advisors, you know, have communications with banks about their clients, the bank's customers, and share information even, or receive information. And there's nothing that prevents that. And, you know, there would be consents forms that somebody would sign saying, yeah, you can interact with my third party financial advisor. So, you know, again, nothing would prevent that as long as the consumer consents, and that would have to be in writing.
Yeah, I guess where my my point of contention would be is that the bank has a relationship with that financial advisor coming in to offer that service, and the client could then have a trusted contact with that financial advisor and have that set up to add some safeguards. But on the banking side, you're saying they might have it or they might not have
I
it.
see. Yeah, right. Yeah, so you know, that would be an option that certainly banks could offer. They could now, as I said before. And I think typically that would be a family member or, you know, a good friend of the bank customer. You know, obviously banks are subject to you know, fiduciary responsibilities when it comes to taking care of their customers' funds. So in terms of, you know, a trusted advisor sort of inside the bank, you know, that I think that well, I'm not sure I may be going down the wrong road with that one in terms of your point, but you know, I think if for a bank, you're talking mostly, you know, sort of outside individuals that are in their lives, these bank customers. I may be completely missing your point.
What I'm saying is that they're able to set up a trusted contact on one side of your bank getting an investment, but they're not able to do that in the same physical location for bank accounts that they have existing with a CD or with a savings account on the other side of your bank, because that bank may not have that option available to the customer right now. That's what I'm.
Yeah, I think they could, you know, create that kind of relationship. It just would be working through the documentation and getting the customer's consent.
I think it's really important that if you're offering financial services and another company is part of a bank, that it remain consistent across the board for all banks and all financial institutions to offer that to all seniors. But that's where I'll pause and go to Senator Martin's issue, is because I think some of that could have been prevented if there had been a trusted contact on that account. And that's where the importance really lies here, that if someone is coming on as a beneficiary, and I know you mentioned about banks not wanting to print on statements, and that's a whole nother issue. But if in fact that trusted contact, one of those other siblings, were on the account, that probably would have been intercepted long before the passing of the friend or the constituent, and that account would never have been re-registered in the sibling's name who did it unknowingly to the rest of the family. Is that safe to assume?
I think I think you could assume that. You know, but again, you know, you'd have to for the trusted contact to be in place, you'd have to have the consent, and sometimes, you know, you'd have to trust the trusted contact as well. So at a certain point, you know, banks have to say, okay, you know, this is what we can do, and you know, we can't you know, solve every or foreclose any, you know, potential sort of risk of fraud. But yeah, I think it's safe to assume that in that case you could have averted that. And again, that's one of the tools that I think we'll be talking about with this elder financial exploitation bill, to again give banks the ability to contact someone like this. Now, again, that's going to be up to the customers to decide whether or not they want to have a person like that get that information. And to the point I made earlier that you referenced, oftentimes these customers do not want these individuals, like a beneficiary, a payable on death beneficiary, to be named or seen on these account statements, because there are people in their lives that may see the statements, in their house, for instance, and object to the fact that they're not getting the money, whereas the others, and maybe completely, an appropriate sort of designation that the customer has made, not through undue influence, but that's just who they want to give the money to, and they just don't want anybody to know it. They'll often ask for that when they're setting up these accounts.
Sure. And having been in financial services for almost 28 years and having a fair amount of senior clients, and dealing with that give and take with family members every day. Yeah, I would say that there's nothing against statute that says you can't have a beneficiary listed. So I just want to be clear. It's just the perception of where the money might not be going, that we don't want to have disclosed. I would say that, and to go to Senator Berthel made a really good point before, underneath the situation that Senator Martin presented, was there or could there be confirmation that it at least is mailed out on the change that was made with the transfer on death? How does that work with the folks that are, within your purview in your organization? So on that transfer of death change that was made to that account, how was the notification, or how would the notification go with your banks?
So I think in that, I did read that testimony from the gentleman from Avon. I believe there was a power of attorney involved there, that he was able to use that, the son was able to use that to put himself on as an owner. So there are lots of complicated issues with that. First of all, the power of attorney, when you're going to use it to benefit yourself, when you're the agent and you're using it to benefit yourself, it has to specifically say that you can do that. So, at presumably when the principal, the account owner executed the agreement, they looked at it, maybe they reviewed it with their lawyer, and it said, hey, listen, this agent can take your money and give it to themselves. These powers of attorney are extremely powerful estate planning tools that are the subject of abuse, and oftentimes financial institutions are picking up on that, as we had mentioned earlier. They see these patterns of transactions, they see where the money's going, where these agents with these powers of attorneys might be using them. So in that case where the account owner gave the child a power of attorney, the power of attorney put themselves on the account as an owner, nobody would know that except the power of attorney and the owner of the account, assuming there was no other joint owner on the account. So because of the privacy rules, the bank couldn't, if they thought that was odd, reach out to another child who they might know of. Maybe it's another customer at the bank, and you couldn't reach out to that child and say, hey, your brother just put himself on the account, and there's a lot of transactions down at the casino. You can't have that conversation unless, again, we had this tool where the other brother was named in a document as a trusted advisor, someone that the bank could talk to.
Fair point. I think there are ways that we can, work together on this to improve. If there are bad actors in certain circumstances, to dissuade them by having these different options that would be available to seniors or to other vulnerable parties that have accounts, whether they're custodian for a child, for an estate account, whatever that might be. But I think there are options in place that we can make uniform across the board that would make it more difficult for that bad actor with the power of attorney. I mean, many financial institutions now require that power of attorney refile annually. A lot of folks don't want to do that. So that kind of keeps that away, conservators having to bring an original court order. So as you raise the bar and as you make it more difficult, some of these situations kind of go away because of the additional reporting or the reporting that's required up front to even be named on the account. So a lot of companies now, it takes you a month to get to be a POA. I'm not sure about the banking world, but I know on the outside financial world, you can't just become a POA in a day or 2 or 5. The due diligence is much more stringent now, and that's a great thing for folks. So I would say that again, I thank you for the testimony. I know you also did look at some of the questions around providing paper statements and the like, and I saw virtually a whole lot in that testimony, and you know, when I see virtually, I get a little nervous. The heart starts beating because a lot can fall under that term. But when I read that testimony this morning and saw virtually, I think mentioned 3 times. The one question that I would pose is that you mentioned in the testimony that it doesn't necessarily qualify, or CDs qualify for having that level of transparency. And my question would be, for the seniors that we're talking about right now, probably CDs would be their greatest asset in many cases with a bank or with a financial institution. And I find the fact that they're not included as not virtually as something that is habit forming, that is either quarterly statement or semi-annual statement or however that's going to work. By negating that asset and keeping that asset off of a statement, it just leads to less transparency and not having someone's greatest asset be visible to that individual or to the folks that are helping them, family members live. It's a big concern. It's certainly a big concern with not having that higher bar that we've been talking about now for the last half hour.
So in the case of CDs, you know, that's a deposit product that's meant to sort of be static and either it could be there for a month, 3 months, 5 years. And there are no transactions coming in and out of those because they're not permitted. And if they're closed early prior to maturity, there would be a penalty, which could be waived under, you know, hardship circumstances, which banks regularly do. So I think that those there's not a need to see those on a periodic statement from a transaction standpoint, where you need to look at this account and see if there is anything going on in that account, unauthorized transfers that you should be aware of. And so there is not that need for those, but I will say that many banks offer that as an option. Lynn Giroux, who you'll hear from earlier today, I spoke with her about this yesterday. We asked a few banks. She said that if a customer wanted their CD be reflected on their statement, they could have that as an option. When the account matures, they'll get a notice from the bank by law saying, hey, your CD is about to mature. It's either going to roll over automatically, or you have to come in and do something about it. Take it and move it into another account, or move it into, you know, another CD or any other type of account. So it's not sort of set it and forget it. There is interaction and including 1099 statements, 1099 or 898 INT statements that the bank sends out every year for interest. So there'll be that mailing to, you know, I guess remind somebody that they have a CD. But yeah, that is one case where when I say virtually, you know, that what I mean by that is like 99%, you know, of the accounts, and CDs is probably not one of them, but almost every other account, you know, it receives electronic fund transfers, and because of the law, then they're required to have statements.
I'll wrap it up. But from the standpoint of looking at folks as assets and an IRA, for instance, good place for a CD. So to talk about the dollar value or the amount, certainly, and having the need to take required minimum distributions. So there could be activity there, certainly, that you want to protect folks and let them know what it is that they need to do. And those statements sometimes do allow that communication between a financial institution and the customer or the client, depending upon the level of a relationship, to be able to know what it is they need to do, what it is they not need to do, or what's happening that they didn't know about. But thank you, Mr. Chair, Madam Chair, for the opportunity today.
Thank you, Representative Paolillo. Representative Doucette.
Thank you, Madam Chair, and I appreciate the discussion on this, and I look forward to continued discussion when we have the elderly financial abuse bill at a later hearing. I'm sure we'll get back into it. I wanted to shift back and ask you about the 5537, which is the DSS applications. I appreciate you highlighting the statute from the social services statutes that addresses this. So the first question is, and I asked it of the commissioner designate, are you aware of any instances where the department or has had to mediate an issue regarding any statements not being provided in a timely manner or anything like that?
I'm not aware of any specific issues. We did talk to a few of our member banks about this, including Lynn Giroux, who's going to speak specifically about this, and really just what is their normal process for responding to these things. You know, banks have whole departments, depending on the size, just to deal with government requests and things like subpoenas, grand jury subpoenas, bank executions from creditors. They received, you know, lots of these every day, and have people that are specifically trained to deal with these. And because it's all of these things that they're responding to are governed by laws and regulations, as banks, one of the most highly regulated industries that you can find, you know, take that just as seriously as all of their other compliance responsibilities, and have policies and procedures that they, you know, theoretically could be examined on by the Department of Banking if there was a problem. And the federal regulators in the case of federally chartered banks. So while I'm not aware of any specific instances of that, I'm also not aware of having heard of it before. And I think we heard a little bit of that from the Department of Social Services, even that. So I hope that is not a you know, very frequent thing that happens. Again, I've been doing this for almost, you know, 25 years, and it's not something that's come across my desk. But I would just point to, you know, how responsible banks are in dealing with anything like this, especially that's, you know, so heavily governed by law.
So my next question, and maybe this is a good question for Lynn as well, but I was going to ask you, and I can maybe touch on it with her as well. In the average case where someone is coming to you, and let's say it is a 5-year ask for statements for look back for a Medicaid Title 19 application, for instance, how long typically would that take? Do you know, most banks, have they reported to you? Do you have a general idea of how long that takes and what's involved in it? And I ask that just because, you know, the proposal, which, you know, I think, you know, Rep. Rochelle talked about a little bit, took 25 days. We heard that, you know, 90 days is the time frame that somebody has to act within on their application through DSS. 25 days. I mean, I don't know how long, you know, the most sort of cumbersome requests you might get associated with one of these applications would take. So that's one of the things I'm curious to hear.
Yeah, we talked, you know, polled our banks informally on that, a few of them, and you know, we heard anywhere from 2 days to 15 days, and that varies depending on, you know, volume flow. It's not just these that they get from the Department of Social Services. I mentioned before, it's all kinds of government, you know, subpoenas and private, you know, creditors executing on judgments and so forth. So it depends on that. Depends on, as you just mentioned, Representative Doucette, the complexity of the customer's relationship with the bank. It could go back very far with lots of loans, deposit accounts. So it really kind of depends on that. But that having been said, you know, what I heard was, you know, a matter of 2 weeks at sort of the outside. And I think Lynn will tell you that hers is about 2 weeks, but, you know, much shorter when, you know, it's you know, volume allows for that to happen. So yeah, that's sort of our informal poll, I guess, if you will.
Okay. So it sounds like in most cases, 25 days would be reasonable, but there may be some, you know, extreme or exigent circumstances that.
Right. And our concern there would be that there'd be a fine attached to it. And, you know, where there's a situation where, for instance, you know, the department that does these, for instance, is struck with COVID. there aren't there, the bank doesn't train, all the, have a backup team, if you will, that swoops in and takes it. So it could, take a little longer. I don't want to steal Lynn's thunder too much, but the United States Postal Service apparently nowadays is quite slow. And so delivery of these documents can be a week, when they send them. So, we're very nervous about any kind of deadline like that. As I mentioned earlier in my testimony, there is some teeth in that statute, including subpoena power. And there is a fine if the subpoena isn't dealt with according to the time set by the department, which they can do. There's the section in that statute they can set the time for examining, or I think it's related to a subpoena, but so there is some teeth where in situations where there was pressing time, they could take that tact. I was heartened to hear the commissioner designee say that what sounds like it's not uncommon to get extensions of that 90-day time period. But again, I suspect that that's somewhat rare due to a bank's, failure to respond in a timely fashion.
I think we could certainly understand and cut you some slack with the USPS being slow on something like that. But it sounds like it's not unreasonable to think that we could work within some reasonable time frame to get this done for folks. So appreciate it. Thank you. Thank you, Madam Chair.
Thank you. Are there any other questions from the members? Then it's my turn.
Thank you. Oh, sorry.
So, staying in line with 5537, I had a constituent who lost her assistance because she could not get the statements from the bank. And I was involved in in her trying to resolve the issue. And again, we could not get the statements. And I think part of the problem was that DSS didn't want to work with us as well to give her the extension that she needed. So I think that it can't be all on the bank, that the DSS has to play a role in trying to get the extension, give an extension if I'm going to call them consumer, if the person is trying everything in their power. My concern with banks, the Banking Association being in opposition to 5537 is this. It's difficult to get a printed statement today. And if you do want a printed statement, you have to pay for it. And some elderly, I'm going to say the elderly, some elderly customers don't have printers, right? And so they don't have access to their statements. And some of them don't have a computer. Let's even take it that far. And so I understand what DSS, what they're trying to do, is because some banks are pretty obstinate about getting their information. I mean, this family, even the granddaughter, made numerous attempts in trying to get the statements. And so I think that there has to be some give and take on both sides. And unfortunately, I wasn't here for the designee testimony to ask that question. How often do you give extensions? Do you give extensions, in fact? So I understand the opposition and the resistance to do this. I have a question. You said that you testified that the DSS commissioner has subpoena authority. Do you know what that process looks like?
The statute doesn't lay out how the process would work. It just pretty much says the commissioner has authority to issue these subpoenas. And there's some language too about examining the records of somebody. And by the way, it's anybody, it's not just banks. Although this bill, focuses just on banks. I think for fairness, there ought to be looking out elsewhere as well. So I don't know, what the process is in terms of when the DSS might issue a subpoena. I don't know why. Maybe they do issue them occasionally. I don't hear about them a lot. So maybe it's a tool that they don't use. It's underused perhaps. it's probably an attorney in DSS that would have to draft that up and issue that subpoena, but banks receive subpoenas from government agencies probably every day, so it's not unheard of, and that the process around that generally subpoenas requires a specific time frame in which to respond. I'm just talking generally, not necessarily about the DSS, but my knowledge of subpoenas generally requires a specific time frame deadline for response. And if you don't, that's in most cases you're subject to contempt of court, because those subpoenas are issued including by a lawyer as an officer of the court, has the authority to compel somebody to provide records or testify. So it's not a tool that probably DSS would want to use frequently, but certainly in cases where somebody is potentially not going to meet their deadline, they could issue one of those subpoenas and make things move a lot faster if there was a problem.
Thank you for that. So yeah, I'm interested in knowing if it would be easier to require banks to respond in 25 days as opposed to going through the subpoena process.
Well, I mean, I don't know that the banks it would be easier for them. Again, I think what you'll hear from Lynn Giroux from Essex is that they get these things and they don't say, oh yeah, just another request from DSS that we can slow walk. That they don't, again, they treat these things much like any of the other sort of legal process that they get served with. They understand that a prompt response is required, that the law requires a response. So I don't know that they would treat a subpoena, I mean, it would certainly be somewhat different in the sense that there would be a specific deadline, if you will, in the subpoena, and there could be worse outcomes for not complying with the subpoena than just a straight I think that the Department of Social Services has to issue a certificate to the bank that says, hey, this certificate is being provided with this request for this individual's documentation, and the certificate is really, I think, for the most part, to signify or document the fact that there is an exception in Connecticut's financial records privacy statute specifically for these kinds of requests. So the commissioner is saying this, I'm certifying that this request is being made for the purpose of somebody's application for benefits. And so we're okay from a privacy standpoint. So I really I think banks would look at those two things, the certificate with let's say a 25-day deadline and a subpoena in the same way. So it might be easier for the Department of Social Services to have that as opposed to a subpoena where you have to probably get a lawyer involved. But again, I can't give you statistics as to what level of problem this is in terms of delays, but I suspect that the anecdotes are the exception to the rule, and where there are exceptions, like I said, there's the teeth of the subpoena that the department could use.
Thank you. And I guess I should have clarified to say, I wonder if it'd be easier for the customer.
Oh,
Right. So I should have clarified that, but no, so that was just a thought. But thank you for your testimony. I appreciate, I think we had you under fire for about 40 minutes. So I
pleasure.
appreciate that.
And any follow-up information that we can provide to committee, we're happy to do that.
All right. Thank you so
Thank you.
much. Next, we have Bruce Adams. Oh, Bruce. Okay. Hello, Mr. Adams. You're joining us online.
I am. Yes, I'm out of state today. I'm sorry I can't be with you. Can you hear me?
Sir.
Well, thank you. Senator Miller and Representative Doucette, Senator Berthel, Representative Delnicki, and the distinguished members of the Banking Committee. My name is Bruce Adams, and I'm the president and CEO of the Credit Union League of Connecticut. And, while credit unions offer the usual banking products and services like checking accounts and deposit accounts and loans and all that, we offer the consumer a unique benefit. So by returning our profits back to the members, mostly in the form of advantageous rates on loans and deposits, As financial cooperatives that are owned and governed by their members themselves, we keep our profits local, and we exist to lift up our communities. A credit union's field of membership is the concept that covers potential members that a credit union may enroll. And this field may include employers, religious institutions, industry affiliation, geographic location, or membership in certain groups. And while federal credit unions may also include people who are members of associations, current law precludes Connecticut credit unions from doing so simply because it's silent on the point. In fact, there's 42 other states that allow for members to be included in the field of membership of a credit union. Vermont is a close 43rd, and we think it's about time for Connecticut to add this into its law. So under Section 36A, 438A, the field of membership of a Connecticut credit union is limited to either common bonds or persons within a well-defined community. The language that we've submitted with my testimony for your consideration would change the "or" to an "and" allow for the any combination of those types of membership. And of course, with the adding of associations into the field of membership, it's important to note that our suggested language specifically excludes those associations that might be formed solely for the purpose of increasing a credit union's membership. I've included some demographic data on Connecticut credit unions below, and the language is attached to my testimony. I'm prepared to answer any of your questions on this bill or any of the other bills on today's agenda. Thank you.
Thank you, Mr. Adams. Are there questions from the members? Representative Delnicki?
Thank you, Madam Chair, and thank you for joining us, Bruce.
You're welcome.
So basically what you're saying is you're looking for a level of parity with the federal credit unions in Connecticut. Does that sound pretty much spot on?
That's correct. And not for nothing, but to increase or to join the 42, almost 43 other states that have this as well.
Well, it certainly makes a tremendous amount of sense to me based on the fact that credit unions return everything to their shareholders. Note, I don't say stockholders, shareholders and those folks that put their money in the credit union. And that in essence, you're basically a nonprofit. Is that correct?
Yeah, we were not for profits. And the sort of catchphrase we use to encapsulate that is that credit unions are not for profit, not for charity, but for service. And the service is to their members or customers, to use a more generic term.
And I stand corrected as a not-for-profit as opposed to a nonprofit and as opposed to a financial institution that looks to make profits. It certainly is a simple way to address the issue, and I certainly think it makes a lot of sense. Thank you, Mr. Adams.
Thank you, Representative.
Madam Chair.
Are there any other questions? Senator Berthel.
Thank you, Madam Chair. Thank you, Bruce, for being here today and for testifying before the committee. I would align my comments with those made by my ranking member in the House as well. Can you possibly, just for the purpose of some clarification, tell us what an association would be? It seems very obvious, but there may be some people listening that don't know what that means.
Sure, and thank you for the question, Senator. In associations, very generally, can be any group of people that have a formal entity structure where they share a common desire, such as a running club or a charitable association. But in the federal rule, there is a standard that we've included in our proposed language that sets forth a number of circumstances. I'm just checking. It's I think 8 circumstances that allows the commissioner to look at as to whether the type of association would be right for inclusion in a Connecticut Credit Union's field of membership. So we would look at, or the commissioner would look at, forgive me, whether the association provides opportunities for members to participate in furtherance of the goals. So are you a member of a trade association or a chamber of commerce, things like that. Perhaps whether members have to pay dues to the organization. And the commissioner can look at the totality of those circumstances and decide that such an association is right for to include in a credit union's field of membership.
Okay, thank you. And I also see in the proposed language that you provided in your written testimony, the proposed language tracks the federal rules, and I'm reading from this now, and requires that eligible associations must have been formed to serve a purpose other than expanding the credit union field of membership. So they could not, if there were a Bruce Adams state credit union, we could not have the Bruce Adams Association, which might be outside of the normal definition of a field of membership, so that people could join your credit union. Is that very silly understanding correct?
Well, certainly if I could lobby you to include that and charge excessive dues, I'd love to do it. But other than that, yes, I would agree with you, Senator.
All right. And Madam Chair, if I would, just because we had some good discussion today regarding Senate Bill 112, I'd like to ask Mr. Adams if he might shed some light on how credit unions might address that issue. So Bruce, you know, we've been, I'm sure you've been on waiting this entire time, these 3 hours, to speak with us, and heard all the dialogue regarding Senate Bill 112, which is an act requiring Connecticut banks to list account holders or owners on statements. We've had quite a bit of dialogue. We've had some, we got some great feedback from your financial services colleague, Art Corey, from the Bankers Association. I'm wondering if you could shed some light on how credit unions may be already addressing this issue, or how you might possibly have another solution that we haven't thought about, or if you agree or disagree with some of what we've said today already.
Thank you, Senator. The issue is a real one, that the account owner, the account holder, typically should have the final say on what is listed with respect to their statements. And I would add that for many credit unions, I think our median size in Connecticut is $40 million. And many of us are very small businesses that have fewer than 10, fewer than 5 employees. So to customize paper statements based on a member's request is burdensome. That's the selfish interest on the part of our industry. The more, I think, consumer facing interest or issue is the fact that there are parents who would choose to make one child a beneficiary and exclude another. And so if the financial institution is a part of betraying or exposing the account owner's wishes, that makes us nervous. All of that said, it is important that we protect against financial exploitation, and we've had extensive discussion on the other bill and potential bills that would protect a financial institution and protect the consumer in identifying and eliminating or stopping possible elder abuse and fraud. And those are very laudable goals. And we would join in efforts to protect against financial exploitation, especially of elders or other vulnerable populations.
All right, thank you, Bruce. I appreciate that, and your commentary there regarding how the I think sometimes we lose sight of the fact that credit unions are generally smaller businesses, financial institutions than some of our banks are. So I appreciate the just the putting a pin in that some of this work could become burdensome for your member organizations. But I also appreciate your comments regarding this issue of 112, and of course, wanting to protect against any kind of exploitation. And I'm sure the committee would welcome, as we offered to the Connecticut bankers as well, to sit at a table with you and figure this out. So thank you, Madam Chair.
You're welcome, sir. Representative Delnicki?
Yeah, just a follow-up, Bruce. I mentioned the concept of a suspicious activity report that conceivably could be made pertaining to activity with an elder with someone else's name on there, so as to alert a fiduciary to the situation. Would that make some kind of sense with the credit unions?
Yes, I think I mean, again, I don't want to sound like a broken record already, but for such small businesses, adding additional reporting requirements it gives us a little pause, because again, if a credit union only has 5 employees, it will be, whether it's expediting a response to DSS or filing an additional suspicious activity report, et cetera, that is that's a much bigger burden on the smallest of credit unions. But that said, these are important obligations that we take very seriously, and the financial health and independence of our members is paramount, because after all, they sit on our board of directors, so we do what they want. And with respect to contacting a trusted fiduciary, credit unions do stuff like this all the time. Because many of them, especially the smaller ones, really know their members very well. They know when something's amiss right away, and they will take the time to do the due diligence they need before just mechanically responding to the transaction request.
So then just another comment. So the folks that service the credit union members could very well be the best possible watchdog when it comes to suspicious activity.
I think that's right, and I think even as my colleague and friend Art Corey mentioned, the smaller community banks also know their customers much better, because the size and scope of that customer base is much smaller. And so as you get to a much larger institution, that front line of defense can become more challenging from an operational standpoint. But certainly credit unions are in the business of knowing their members, giving them good financial advice, and helping them achieve their financial goals. And so we pride ourselves on knowing our members as well as we possibly can.
So it almost raises the thought in my mind that the best possible way to go is with your local hometown credit union or local hometown bank, state chartered, from the standpoint that they know their members and their customers.
Certainly we have the best regulator in the world, so state chartered is the way to go. And at least for me, speaking personally, I like a small hometown financial institution for precisely the reason that you mentioned.
Thank you for your testimony, Bruce, and thank you for the answers. Take care. And thank you, Madam Chair.
You're welcome, sir. Are there any other questions from the members? So thank you very much. And I concur with my counterparts, my colleagues here, about the credit unions and smaller banks, community banks. They really do have their pulse on their fingers on the pulse of the community. So I appreciate credit unions, because I find them a lot easier to navigate through the process when trying to acquire loans. So it's not a pitch for credit unions. I want to make that known, but I appreciate the work that both you and the banking industry do to protect our constituents and the residents of this state. So thank you very much for testifying for us today.
Thank you, Senator.
Next on our list is Lynn LaRue, I'm sorry.
That's okay. It's Lynn Giroux.
It is a G.
Senator,
I'm sorry, it's pretty late. We've been
that's
doing this
okay.
for a while, so I
It's been a
apologize.
long day.
For that, I need to get new glasses, but it is true. Thank you. Sorry for the mispronouncing your name.
No worries. Chair Miller, Chair Doucette, Senator Berthel, Representative Delnicki, and members of the committee. It's good to be before you today, and thank you for the opportunity to testify. As I said, my name is Lynn Giroux. I'm the Executive Vice President and Chief Operating Officer of Essex Savings Bank, a small community savings bank on the shore, Essex, Connecticut. I'm here to testify in opposition to House Bill 5537, an act concerning requests for documentation from banks made pursuant to applications for social services. One of the areas I manage and respond to at the bank are the government requests for customer financial records. This is an important and sensitive area as it involves the disclosure of private customer financial information. There are also laws and regulations in place already that we must follow when responding to these government requests. So we spend a lot of time and resources, usually manually, by the way, ensuring that we get it right and get it done in a timely manner. Our policy is always to respond to government requests as promptly as possible. Typically takes my team no more than a couple of weeks to provide the requested customer records. But with that said, I mean, we're right on it. On the rare occasion that we are not able to respond in that amount of time, it's usually because we're experiencing a spike of government requests or subpoenas that stretch our resources, or because of factors outside of our control. Unexpected delays in the mail delivery, fax issues, and over the last few years, COVID-related absences, and people working off-site just makes everything take a lot longer. I'd like to also note that our policy at the bank is to retain records of our responses to these requests as the bill would require. And while there are costs associated with responding to these requests, we do not charge any fees, nor would we want to. And in my conversations with many other community bankers, they do not either. We all believe this is the decent way to go. We believe that most banks in Connecticut treat these requests in the same way we do. Therefore, we don't think the legislation is necessary. For these reasons, I respectfully ask the committee not to move forward with this bill. And you'll also see that the CBA has provided written testimony on this as well. This concludes my testimony, and I'd be happy to answer any questions you may have. And thank you.
Thank you. Questions from the committee? Senator Berthel.
Thank you very much for your testimony before us today and providing some clarification regarding what I believe is existing federal law and the requirement for financial institutions to provide these statements. I guess my question to you is this. Earlier, we had Representative Rochelle testify before us, stating that she has had constituents who have been charged fees for these the preparation of these documents and statements. And I know she obviously did not specifically mention your fine institution serving Southeast Connecticut, but I'm wondering, maybe there's some confusion as to what fees are being collected that we can help to help the representative to understand, because maybe it's not the same thing that we're talking about here. So I don't know if you can shed some light on that or if that made any sense.
It did make sense. And I would say from my conversations and my observations of the industry that the fees are probably being charged for copy fees, statement, the number of pages within a statement, perhaps. This is an assumption because again, when someone's going into Title 19 or the state is requesting information for someone to qualify for a program, I wholeheartedly agree that they don't need to be charged a fee to provide that paperwork, and turnaround is important.
Okay, thank you. I appreciate that. And I didn't mean to put you on the spot either with respect to making a general statement about what perhaps what all financial institutions may do. But thank you. I appreciate your testimony today and the clarity that you provided to the committee. Thank you, Madam Chair.
Thank you, Senator Patel. So for clarification, those fees are for hard copies?
Yeah.
So if you want a hard copy, you have to pay a fee. Online, you have access online. So if you don't have a computer, you don't have a printer, you can't print it. So those are the fees that I'm speaking of. Okay.
Could I interject? To clarify?
Yes, ma'am.
Okay, thank you, Chair. So if the state is requesting information, if the Department of Social Services is requesting information, they're going to want hard copies, which the bank has to provide. They're not going to rely on the customer to provide it or to obtain it. Generally, we have to send it in because then it's our affirmation that that information is correct.
Okay, thank you for that clarification. But in this particular case, the was requested to obtain the information from the bank, which in turn charged them for the copies.
I see.
Are there questions from the committee? Representative Hoxa.
Thank you, Madam Chair. Thank you, Lynn. We certainly appreciate your testimony. What I just wanted to add to this conversation that we, may be overlooking is that some of these fees are, should I say, discretionary, depending on the institution. From my experience, without naming any names, I've noticed that the smaller, more community-oriented banks, state chartered, will usually waive these fees or not have them in their policy manual, or not charge at all as a policy of their bank. And some of the bigger institutions, federally chartered and the bigger names sometimes will charge for these types of documents. And I do know that they can be very extensive, many pages, hundreds and hundreds of pages, which if you charge by the page or by the every 50 pages, by every 100 pages or whatever, that can really add up. So it is very important to note that I believe that for at least some institutions out there, it's a discretionary thing. So some choose to charge, some choose to not charge. So, if that is an aspect that, this committee and, this whole legislative body wants to take up and, deal with that how we may, that is something, obviously we could, look further into, but as it stands right now, from my experience, I've seen institutions that charge and institutions that don't charge. Thank you.
Thank you, Representative Santos.
Thank you, Madam Chairwoman. I wanted to echo what Representative Hoxa has just mentioned. In my experience as well, the community partners that we have in the banking industry typically do a discretionary approach when it comes to these fees. I think that Ms. Giroux will agree with me that the community banks really want to partner with their customers, right? And the credit unions as well. They get to know these people on a personal basis. And so in the situations that sometimes are far and few in between when it comes to something like this, I would say that most feel a bit of sympathy for the person before them and are not going to be charging these fees. Perhaps there is a way to look at this in a different aspect of how we manage these fees, or perhaps a different process of looking at them, because banks are not making hundreds of thousands of dollars off of the printing fees, I would say. And perhaps that's what we need to do. We need to analyze what that would be in order to address if this really is a major issue. So I just wanted to echo what Representative Hoxa mentioned and share my experience with that as well. Thank you, Madam Chairwoman. Appreciate the time.
Thank you, Representative. Are there any other questions? Just one final question. We were talking about fees, and I don't know. I know what federal chartered banks do, but in your experience at your bank, overdraft fees, what do your overdraft fees look like? And how do you handle that process? Because some of the federal banks, that they will allow a overdraft to go through and charge a fee. So I guess my question is that a practice of your institution?
That's a loaded question, Madam Chairman. So let me answer that as best I can. We only charge if the account is overdrawn, not if the account is uncollected, in the case of Essex Savings Bank. Many of the banks in the United States have an overdraft privilege program, which has allowed them to assess overdraft fees for many reasons. And it's a sad state that the CFPB is going the route that they are, and the government is too, to regulate us further on this, because we disclose what our fees are. We do a service. In our bank, we call people when they're overdrawn. I know, very old fashioned, but we're a community bank, and I think I can speak for many community banks in that we're very fair to our customers. It takes time and effort when there is an overdraft for us to process it. We charge $30 for an overdraft, but I don't think it's unfair. I don't know whether I've answered your question fully or not.
Thank you. And I didn't mean to put you on the spot, but this is an issue that's near and dear to me. And I was just interested in what your bank does, because I think, and I'm going to put it out there, it's predatory to me, and what some of these federal banks do, that they charge families, they allow their charges to go through and then charge them an extra fee. And someone just told me on top of the fee, there's an interest charge. So, and it is predatory if you are on a fixed income, and your funds are limited. And by the time your next payment comes through, you spent most of it paying the bank back. So it was just something that I'm interested in, and just wondering how it, what the state charters do. And you say you're traditional, I'm going to say you're compassionate. So thank you for that. Are there any other?
Appreciate that. Just on that line, I'm sorry if I could interject.
Go ahead. I'm sorry. No, go ahead.
Last year, the state of Connecticut instituted the requirement for a no overdraft bank account, and we could comply with the federal program called Bank On. So I think that checking account, which has been instituted by a lot of financial institutions already in Connecticut and nationwide even, we're in the process of implementing it now. Will address part of your concern.
And thank you for participating.
You're welcome. Thank you.
Thank you. Yes, Representative Hoxa.
Thank you, Madam Chair. I appreciate another opportunity to speak here. I just, wanted to kind of bring up the flip side of what you just mentioned, as far as from a consumer's perspective. From my experience, most customers have actually been very grateful for the ability to overdraft their account. It's not necessarily always something that benefits the bank only. In many cases, people that are able to overdraw their account do so in order to pay a major bill that, if otherwise bounced on them can incur further penalties from the vendor, such as a mortgage company or a car loan, or, a utility bill, something like that, that can incur further fees above and beyond what a $30 overdraft does. So just to kind of highlight the other side of that argument from a consumer's perspective, that sometimes it actually comes in handy, the ability to be able to overdraft your checking account. And there are accounts where you cannot do that. But certainly with many checking account products, you have the ability to do that, and it does many times come in handy for everyone, no matter where you may find yourself on the economic spectrum. I've seen people with a lot of money, and people of a lot of wealth, let's just put it that way, that may have a small little checking account that they use for bills that they just weren't paying close attention to how much money was in that account, and I've seen that account overdrawn, and it hasn't really been a big deal for them, for that individual. And I've seen instances where somebody has been able to overdraw their account to pay some pretty significant bills, and they're grateful for that ability to be able to do that, as opposed to just denying that bill from coming out and then resulting in further headaches with those vendors. Like I said, big bills such as your mortgage or car payment, et cetera, et cetera. So I just wanted to highlight, the flip side of that argument, and how some people could actually find it very useful to be able to overdraw their account, even, at the expense of having to pay a $30 overdraft fee, which is pretty standard for banks as far as, from my experience. Thank you very much, Madam Chair.
Thank you, sir. And I certainly agree with you that it does come in handy, because I've had to use it on occasion. But my comments are based on those individuals who use it as income, and at the end of the month, they don't have food to put on their table. And I'll be honest with you, I've had to subsidize people who've been put in that situation, and where all of their monies have gone to the overdrafts that they've had to pay. And when you have overdrafts at $35 a pop, and you have 10 of them in a month, that's $350, which could be half of some individuals' fixed income. So I certainly agree with you that it is a good tool to have. But unfortunately, some people use that tool to live off of. It's a source of income. So I appreciate your comments. So are there any other comments from the committee? Seeing none, thank you so much for answering the question that did not pertain to the bill, but I just needed clarification. I just wanted to
You're
know how
welcome.
it was handling the overdrafts. Thank you.
Have a good day.
You too. The next person is Jeff Gentis.
Good afternoon. Co-chairs Miller and Doucette, ranking members Delnicki and Senator Bertel, and Representative Hoxha. Thank you for having me speak today, and thanks for waiting around. I'm here to support. I'm Jeff Gentis. I'm an attorney with Connecticut Fair Housing Center, and I coach supervise a clinic at Yale Law School. I'm here to support the bill that Representative Lanoue spoke about extensively earlier, which is proposed House Bill 5207. And I'm just going to, from our work as doing foreclosure prevention, typically people looking in foreclosure are looking to get out of the foreclosure by modifying the terms of their loan. It is industry standard to offer someone a trial modification first. Now, the amount of the trial modification is usually about 2 weeks of your take-home paycheck, which is a lot. They're not looking to, they're looking to figure out how much can you pay, how high can we get it without pushing you over, and it's usually a lot of money. And it's a 3-month payment where you're allowed to make payments at any point within the month. But then when your permanent modification starts, if it starts the following month, you're expected to go back to make your payment by the 1st, and maybe you get to the 15th on a grace period. So that kind of setup, if someone finds out, okay, great, I've got a permanent modification starting, I just made my 3rd trial payment, and now I got to come up with the money in 2 weeks, whereas before I had a month to do so, can put people in a jam. I think what this bill would do is basically was reduce the number of times that would happen, bump it up by basically 6-7 days notice so that someone could prepare for that situation. I understand the typical concerns around what are we doing with state chartered credit unions and banks versus federal banks and the credit unions. Thing is, right now, majority of mortgage loans are serviced by non-depository institutions that are licensed and regulated by our State Department of Banking. So I still think that this could apply to the majority of the mortgages out there and help people, not just in the Ezekiel Santiago foreclosure mediation program, but we would suggest it just apply to anybody with a loan modification program. You know, people who are not yet in foreclosure, why not? So with that, thanks for the opportunity to testify today, and I'm happy to answer any questions that may still be on your mind at 2:00.
Are there questions from the committee? Representative Doucette.
Thank you, Madam Chair. Thank you, Jeff. Thanks for hanging around with us.
Sure.
Okay, so a couple of questions. You just touched on my first one. In terms of the timing on this, how would you draft this if we were to put in a reasonable time frame between, because as I first understood it when I read the proposed bill, and the proposed bill is obviously, as you know, just pretty generic language. I wasn't sure if we were just simply talking about the first payment following the modification being entered into, but now I understand that we're talking about trial payments versus permanent modification payments. So how would you propose to structure it? What would be a reasonable time frame, you think?
I think the guidelines that Representative Lanu was going off of, they already exist. They just say 15 calendar days in most circumstances. And 15 calendar days gets erased because a lot of mortgage companies they're outsourcing everything to third-party vendors, including mailing modification documents and the like. So by the time you get your modification document, you're more like the 21st, 22nd, 23rd. So that's why people can end up jammed up. So instead of just, you take that same language that they're using now, which is 15 calendar days, and you make it 15 business days. And I'm happy to share it with committee leadership if that would be helpful.
And you think that would cover what you just talked about, the trial modification payments as opposed to the permanent modification payments?
Yeah, what it was.
So long as there's 15 business days between any of those payments, is that basically?
It would be
the way?
15 days from, so the idea is essentially, when do you prepare the modification document? If you prepare the modification document on the 25th of the month, right now, most mortgage companies are going to say, okay, we're not going to start the first payment, in a week, but we're going to start it in another month. And it's really just moving the when do you prepare and send out the final modification timing. So instead of tying it to the 15th of the month, you just say 15 days, 15 business days before the end of the month. That language already exists, and it's just a matter of they've already been implementing this rule for there's some version of this kind of practice that's been going on for 10 plus years. If it's the 2008, 2009, it was a mess. You'd get people who are your first, had a long running case where the person's first payment was due November 1st. She got the agreement dated November 27th. So, it was a recipe for failure from the start. But that language exists. And I'm happy to just adapt what's out there and share it so that you can see what it would look like.
That would definitely be great. And
Sure.
so within the confines of the program as it exists now, I think you probably know it as good as anybody. You think this is a reasonable thing for the mediator to be able to monitor, and for the court to ultimately be able to monitor and ensure compliance with this?
I think it would be, I think so. And you'd have to make it clear that, and maybe this is more for language, just make it clear that the court could order essentially, like if the person wasn't given that time to reissue a new modification that was compliant, so that they would have the time to pay it. I think that's the kind of easiest way to enforce this rule, is essentially encourage the judges, let them know that they can actually, order the mortgage company to issue a compliant document.
And would that cover, you think, I mean, does it ever happen that a modification takes place outside of the mediation process? So if somebody has elected to be in the mediation program, does this ever happen outside of an actual mediation meeting that, and if so, would that be covered?
modifications happen all the time. I think, that some of the, maybe roughly a third to a half of modifications are happening pre-foreclosure. So someone who's just somewhere between, 2 to 6 months behind. In those circumstances, I mean, I could think about, I haven't thought about how exactly to deal with that, but maybe it's making it clear that, failure to comply is a defense, or failure to comply would be a unfair trade practice, something
Yeah,
like that.
no, I'm thinking more about somebody who's already in the foreclosure action's been filed.
Gotcha.
They're in the program. It's being monitored. They maybe had a mediation or two or whatever.
Yeah.
I'm just, thinking if it happens outside of the mediation process, that they're able to get on the phone with their lender and say, okay, great, I got a new job, I came into some money, I'm ready to start, let's work something out.
Yeah.
Whether or not this would also be something that we, does that happen, and is it something that we should be thinking of?
Oh, sure.
That they would be required to go back to the mediator and to the court to get that modification signed off on?
Yeah, if they're already in court, it's not usually all that hard to get, but to get a hearing going, a status conference or something like that to be heard, so that this kind of issue could be clarified if it turns out that they were jammed up.
Yeah, I'm just trying to think of the way that the statute's currently drafted and how it, happens in reality.
Yeah.
Because in a perfect world, you're sitting in the room with the mediator, the bank's attorney's there, the mortgagor's there. They write up this modification and they say, oh, okay, well, we're going to make sure that it's 15 business days from but and that part's easy. I'm just wondering again, if we're not capturing everything there, and how, enforcement of that would sort of work in the real world.
Yeah, with being as much as I can say in public, what happens on the ground, what happens in a court hearing, sometimes reflects the level of training and experience and background that each jurist brings to the bench. And so sometimes things don't go as expected. So I think about making things explicit and having something in the statute that provides for a straightforward way out of that sort of predicament would be good.
Yeah. No, I think I think that's about as best as we can hope for. But I'm just exploring this, how this would work in practice. It sounds like, it's reasonable enough on its face to incorporate that into the statute and then the procedure. And it sounds like it would certainly help. So thank you.
All right, thanks.
Thank you, Madam Chair.
Are there questions, any other questions from the members? Well, that brings us to the end of those individuals who signed up to testify. Is there anyone in the audience or online who would like to testify? Oh, we're not supposed to do that. I apologize. I'm going back to 2020. I'm going back to 2020, so you have to excuse me. So thank you, Madam Clerk. So that brings us to the end. We would like to thank everyone for testifying today, and have a nice weekend, everyone.